Okay, so welcome back, everybody. I wish you a very good morning, and I hope you guys are all preparing well. I hope your preparation is all going well. So, let us continue our final IDT marathon. So, what and all we have covered till the previous session, what and all we have covered. So, let us make a list of all the chapters, whatever we had done with the revision till now. So, let us just make one quick recap. So, just chapter names, not conceptual recap. So first, I have spent some amount of time in giving you a brief of the entire GST topic. There, I have given you an overview. Thereafter, we have understood the supply chapter. Then we have revised the registration chapter. Thereafter, charge. Along with the charge, we are also done with the composition levy. And going ahead, we are done with the time of supply chapter. Also, we have covered the value of supply chapter. So this is what the bunch of chapters which we have covered till now as a part of our marathon series. So today what we'll be going to do is we are going to pick up one such important chapter, very important from the examination perspective. If I have to prioritize, if someone asks me, sir, out of all the chapters which you have at the final IDT level, tell me one such chapter which should be top priority, sir. Tell me one such chapter which should be top priority, one such chapter which I should refer compulsorily. If I don't refer to that chapter, I should not go for exam only. So such a chapter, if there is something, what is that chapter? If someone comes and asks me that question, I will simply say them input tax credit. Input tax credit. So without writing this term input tax credit, without referring the sections of the input tax credit in your exam, then you might not be writing the IDT exam. You might be writing something else. So if you are writing the IDT exam, definitely in your answer sheet, you will be writing the input tax credit term and various sections, whatever we are about to revise now in this chapter, that section references, you will be writing it compulsorily in your exam. If you are not writing it, definitely you are not writing an IDT paper. So that's one thing which I can assure you. Such an important chapter is this input tax credit chapter. So let us try to go into the discussion directly. So as before we go into that discussion, let us have one quick overview. So this also, if you remember the intro part, when I have given you introduction regarding the overall concept of this GST and all, I told that if you are a registered person, so you will make your outward supplies, outward sales, outward supply of services, like that we will do. So on your outward supplies, there will be something called output tax liability. On your outward supplies, there will be some liability. On whenever you are making any supply, GST will be attracted, no? So on your outward supplies, there will be a liability which we call it as output tax liability. That GST liability, we call it as output tax liability. Now if you are a registered person, if you are a business person, in order to make that outward supplies, you need to procure some various inwards. Yes or no? So like you need inputs also. Inputs means usual goods and usual goods, whatever you would need for the purpose of doing the business. Then you need some services also, which we call them as input services. So you procure various services in order to run your business. And also you also obtain capital goods. In order to run the business, you might also need capital goods. Whether you are engaged in supply of goods or you are engaged in supply of services, to run your business, there is a need for the capital goods. So also you might be procuring the capital goods. So all this put together, even in the intro itself, I have told all this input services and capital goods put together, we are going to call it as inward supplies. We are going to collectively call them as inward supplies. So on all that inward supplies, you would have paid GST, and whatever GST that you have paid on your inward supplies, that we call it as input tax, and that input tax you can take the credit, that we call it as input tax credit. That we call it as input tax credit. So input tax credit is such a mechanism. Input tax credit is the backbone of the entire GST system. That is how, because of this input tax credit, the GST system actually works. So in GST, one of the main feature of the GST is the burden will be borne by ultimate consumer. So input tax credit is the only mechanism which will make sure that the ultimate burden of the taxes is going to be on the final consumer. The mechanism which will make this happen is input tax credit. Okay, right. So now what we are going to do is we are trying to refer to various sections of the GST Act which are talking about this input tax credit. So first I will be talking about section number 16. First we will be taking up section number 16, which is talking about eligibility and conditions for availing the input tax credit. Who is eligible for availing input tax credit, and what and all are the conditions which are required to be fulfilled in order to avail that input tax credit. So that discussion is contained in section number 16. We'll try to start our discussion with section number 16. So first let us talk about eligibility. Sir, who is eligible for availing input tax credit? So if you come to section number 16 subsection 1 says that in order to be eligible for availing input tax credit, you must be a registered person. First and foremost condition is what? Registered person. Definitely. Only when you are a registered person, then only you can avail the input tax credit. And also one more condition, they say that every registered person is entitled to ITC, and also whatever goods or services which he is using, whatever goods or services which he uses or intends to be used in the course or furtherance of the business, then only you become eligible to avail input tax credit. So two things here regarding eligibility. 16 subsection 1 says, in order to be eligible for availing input tax credit, number 1, you must be a registered person. Number 2, whatever goods or services which you are procuring, that must be used in the business, or you should have an intention to use it in the course or furtherance of the business. So actual usage is not necessary. Even if you have an intention to use also, it will be enough. Even if you have an intention to use also, it is enough. So whatever it is, two conditions for availing ITC. Number 1, the person must be a registered person. Number 2, and whatever goods or services which he is procuring, that must be either used in the business, or it must be used, or you should have an intention to use it in the course or furtherance of the business. Next, thereafter conditions. So 16 subsection 1 talking about eligibility. So now we will talk about conditions. So some circulars are there, we'll come to that later. So 16 subsection 2 talks about conditions. What and all are the conditions which are required to be fulfilled for availing input tax credit? So there are multiple conditions which you are required to fulfill. It's not just that the moment you are a registered person, the moment you are buying goods or services which you are using, or which you are having intention to use it for your business purposes, that alone will not be enough. In order to claim that input tax credit, you need to fulfill some conditions. Sir, what and all are the conditions which are required to be fulfilled in order to avail that input tax credit? So that is addressed under 16 subsection 2. In that 16 subsection 2, we have various clauses. Each clause will be talking about one condition. So let us try to understand first condition. Number 1, you must be in possession of a tax paying document. You must be in possession of a tax paying document. If you are a registered person, if you want to avail input tax credit, you must be in possession of some tax paying document. You must have in your possession some document which shows proof that you have paid the amount of tax. Sir, what could be that document? What could be that valid document which I should possess? That could be a tax invoice. That could be a revised tax invoice which is issued by the supplier of the goods or services. Or it could be invoice issued by the recipient receiving the goods or services from unregistered person in case of RCM. Sir, what is it? Self-invoicing. Like in the previous session, I have told you about a concept of self-invoicing. In case if you are a person paying the GST under RCM, in case if your supplier is an unregistered person, in that case supplier will not give you any invoice. In that case, recipient himself has to do the self-invoicing. Even that self-invoicing could be also a valid document for availing the input tax credit. Even that self-invoicing could also be a valid document for the purpose of claiming that input tax credit. So what are the documents which are to be used for the purpose of making for the purpose of availing ITC? Number 1, it could be invoice, revised tax invoice, or it could be self-invoice, or even it could be a debit note issued by the supplier, or it could be a bill of entry or other similar document. In the case of imports, when you are importing the goods, there will be something called bill of entry. That bill of entry could be a valid document, or even document issued by input service distributor. In case of the input service distributor, if the ISD is distributing the document to you, if the ISD is distributing that credit to you, he will give ISD invoice. That ISD invoice could be a valid document. So in order to claim the ITC, you must be in possession of at least one of these documents. If you don't have documentary proof that you have paid GST, there is no availment of GST here. So that's why you must be in possession of any of this document, any of this tax paying document. So just having these documents alone will not be enough. Even in that document, some basic details must be there. So that document, either invoice, revised tax invoice, debit note, self-invoice, bill of entry, or document issued by ISD, they must contain at least the following details. That means minimum details must be there in the document. So just having the document alone will not be enough. In that document, some minimum details must be there. Sir, what are that minimum details which must be there? Amount of tax, description of goods or services, total value of supply of goods or services, GSTN of the supplier, place of supply in case of interstate supply. So these must be there. So place of supply is required only in the case of interstate supply. Only when it is an interstate supply, then only place of supply will be required. So that is condition number 1. 16 subsection 2 clause A, you must be in possession of a tax paying document containing some minimum details. Then we have 16 subsection 2 clause AA. Then we have 16 subsection 2 clause AA. So in order to understand that 16 subsection 2 clause AA, so just have a quick recap of the returns. We need to have some basic understanding regarding returns. I hope you all have it, but just I will remind you in 5 minutes what and all are basic returns. So there will be something called GSTR1. So if you are a registered person, mainly three statements or three returns are relevant for you. GSTR1, then we have something called GSTR3B, then we have something called GSTR3B. GSTR1, GSTR2B, GSTR3B. Sir, what is GSTR1? GSTR1 is a return which is filed by a registered person to declare his outward supplies. So a registered person will declare his outward supplies by way of GSTR1. So like here he will declare B2B supplies. If it is a B2B supply, invoice wise details he will upload in that return. B2C consolidated details. B2C generally consolidated details. In some cases, even in B2C also invoice wise details you are required to give, but mainly B2C, B2B invoice wise, and generally B2C consolidated details you will be uploading. So whatever it is, GSTR1 is a statement of outward supplies, we call it, where a registered person will declare all his outward supplies. Then there will be one more statement which he has to file. So what is that one more statement is GSTR3B. So it is a summary return. I will say GSTR3B is something like a summary return, where you will mention what is your output tax liability resulting from your GSTR1 and what is your eligible input tax credit. That input tax credit you will avail it. If there is any excess payment you are required to make, that you will make the cash payment. So this we call it as summary return, where you are telling what is your output tax liability, what is your input tax credit, how much amount you are required to discharge in cash. So that we call it as GSTR3B. Now in between, one more statement is there which is called GSTR2B. So GSTR2B is not a return which you are required to do anything. You are not required to file this. It is an auto-generated statement. It is a auto-generated statement. It will be generated automatically. Now what will be shown in this GSTR2B is whatever purchases that you have made from other registered person. You might have, let us say for example, this we are talking from the perspective of a person, Mr. A. Mr. A, registered person. Now this person, Mr. A, has made purchases from various people, B, C, D, like that. From different people he made a purchases. Now these are all registered person. So there is a supplier Mr. B from whom Mr. A has purchased. There is a supplier Mr. C from whom Mr. A has purchased. There is a supplier Mr. D from whom Mr. A has purchased. Now these people also will file their GSTR1s, no? These people also will file their GSTR1s. Yes or no? So depending on the GSTR1s which are filed by his suppliers. So Mr. A, whatever purchase he has made from the suppliers, they will also file their GSTR1s. No, depending on the GSTR1s whatever they have filed, this GSTR2B will capture the data of what purchases they have made and what is the eligible input tax credit. Like that they will show. That will be generated. It is an auto-generated statement which will show the amount of ITC balance automatically. And from where this GSTR2B will capture the data, sir? This GSTR2B is going to capture the data from the GSTR1s of the suppliers. Suppliers will file the GSTR1, no? So from the GSTR1s of the suppliers, this GSTR2B is going to capture the data. Now, whatever ITC that GSTR2B says, that is you are eligible for only that much amount of ITC, you will be able to claim it in your GSTR3B. Now in between, one more return is also there, GSTR1A. Sir, what is GSTR1A? So in case if you have already filed your GSTR1, but before filing your GSTR3B, if you want to amend your GSTR1, if you have already filed your GSTR1 but you did not file your GSTR3B for the current month yet, if you want to amend the details, like for example you missed some invoices or you made some mistake while filing your GSTR1, if you want to amend that details in your GSTR1 before filing the GSTR3B of the current month, that updation you can do it by way of GSTR1A, which is an optional facility. So like this, various returns will be there. And recently I have uploaded one video on the channel also talking about GSTR1, 1A, 2B, 2C, like that. So one video also I have uploaded which will be around I think 1 hour 15 minutes or 1.5 hour of video I have uploaded. So if you want more clarity regarding this returns and all, instead of wasting our revision time here, you can refer to that video. I have already done it, which are talking especially from a regular class extract only I have put it here. So whatever regular class we had, from that extract I have taken that GSTR1, 1A, 2A, 2B, 2C, like that, 2A, 2B, 3B. So all that I have explained in a detailed manner with practical example where the data will flow, from where it will capture. So like that, everything we have covered it. So please do refer to that video. You will get better clarity. Okay, so like that, these are the basic returns. Now why I was explaining these returns, why we came to returns, what actually we are discussing something called the conditions which are required to be fulfilled in order to avail the input tax credit. So first condition we have seen. Second condition says that details of that invoices or debit notes which are uploaded by the suppliers in their GSTR1 or using the invoice furnishing facility, and that details must be communicated in form GSTR2B. So what they are saying, second essential condition, in order to avail input tax credit, just having the invoices and all alone will not be enough. That amount should have been reflected in your GSTR2B. That's what they are trying to say here. The second essential condition, only when the input tax credit has been reflected in your GSTR2B, then only you can avail the input tax credit. If ITC is not getting reflected in your GSTR2B, then one of the condition got violated. You will not be able to take the input tax credit. See, sometimes what will happen is you will make purchases from the suppliers, but those suppliers might not have filed their GSTR1s within the due date. You might have made some purchases from the registered suppliers. Those people might not have filed their GSTR once before the due date. They might have filed it after the due date. In that case, what will happen? In the current month GSTR 2B, that input it will not show. Why? Because your supplier has filed that GSTR 1 after the due date. So in case if the supplier has filed the GSTR 1 after the due date, that will not get reflected in your GSTR 2B of the current month. Even though you have the invoice, you can't claim it. So that GSTR 2B, that GSTR 1 which is filed after due date, that amount will be reflected in your 2B of the next month. Only in the next month you can avail the input tax credit. So that is a second essential condition. Unless and until that ITC amount has been reflected in your GSTR 2B, you can't avail the input tax credit. Okay, right. So that's what they try to say it here. That is the second condition. So first condition we have seen, second condition we have seen. And next, however, there is one exception here. Full ITC can be availed in respect of IGST paid on imports, document issued under reverse charge mechanism, credits received from input service distributor, which are outside the ambit of 37.1. That means this information, even though not reflected in your GSTR 2B, still you can claim ITC with respect to this. So what are that things which are not required to be reflected in GSTR 2B, but still we can claim ITC? ITC whatever you are paying, IGST whatever you are paying on imports, documents which are issued under reverse charge mechanism, credit which you are receiving from ISD. So these things, even though not reflected in your GSTR 2B, still you can take it. Usual GST, usual ITC whatever you have made by purchasing from another person, so that is forward charge mechanism related input tax credit, that must get reflected in your GSTR 2B. Then only you can take the ITC. So two conditions we are done. Sir, what is the third condition? Third condition is 16 subsection 2 clause B says you must have received that goods or services. What is the third essential condition? You must have received that goods or services. If you have not received the goods or services, sir, I have invoice, I made the payment also, the amount is reflected in my GSTR 2B also, but I did not receive the goods, I did not receive the services, can I still claim the ITC? No, you can't claim the input tax credit. So in order to avail the input tax credit, the goods must have been received, services must have been received. Sir, I got the invoice, I made the payment, the supplier has filed his GSTR 1 also, but I did not receive the goods yet. The goods are not yet delivered to me. You have to wait till the goods are delivered to you in order to claim the input tax credit, because that is an essential condition. Same thing will happen even in the case of services also. And here they have given one more clarification also. Here they have given one more clarification also. So bill to ship to transactions. In case of bill to ship to transactions, they have given one clarity. So just 1 minute. So here also I will take the help of this class notes. In the class notes, while teaching the regular classes, I have took the help of various charts and all, that I will use it here so that we can save the time. Right. So this is one thing which I want to use it. Okay. See here. So the third condition, what section number 16 says is, in order to avail the input tax credit, you must have received the goods and services. No. Now, what will happen in case of bill to ship to transaction? What will happen in case of bill to ship to transaction? First of all, what is a bill to ship to transaction? Let us say there is a person, Mr. B. There is a person, Mr. B, who ordered 1 lakh quantity of the goods from Mr. A. There is a recipient. There is a person, Mr. B, who ordered 1 lakh quantity of goods from Mr. A, and he was supposed to deliver it to Mr. B. So A's supplier is located in Mumbai, recipient is located in Delhi. So B placed an order with Mr. A asking for 1,000 quantity of goods to be delivered to Delhi. But in the meantime, what happened is, this B is having another customer. B is having another customer who is also in Mumbai. He placed an order for the same 1 lakh quantity of the goods with Mr. B. So B placed an order with A. In the meantime, C placed the order with B for the same goods of the same quantity. Now what Mr. B has told is, Mr. B has ordered to Mr. A, sir, you do one thing. I have ordered for 1 lakh goods. No, don't send it to me. Don't send it to me. You please ship the goods to Mr. C, who is there in Mumbai. You please ship the goods to Mr. C. So now A will ship the goods to C, but he will give the bill to Mr. B. So this we call it as bill to ship to transaction. This we call it as what? Bill to ship to transaction. So A is the supplier. He is shipping the goods to Mr. C, but he is giving the invoice in the name of Mr. B. So this typical transaction, the transaction, we call it as bill to ship to transaction. See, now here two transactions are involved. For supply between A and B, A will give invoice. A will give invoice. For supply between B to C, B will give invoice. A is making a supply to B. For that, he will give invoice. This is a bill to ship to transaction. Whereas B is also making a supply to C and he will also give invoice. That is a normal transaction. Okay. So now let us come to Mr. B. Sir, Mr. B is one of the recipient. No. Now, A has given invoice to him. Let us say 1 lakh worth of invoice has been given, 10 lakhs worth of invoice has been given with 1.8 lakh rupees of GST. Now, B has to claim ITC, sir. In order for the B to claim ITC, he is required to fulfill some conditions. So, in that, he should have a tax paying document. Is he having a tax paying document? Yes, B is having a tax paying document which is given by Mr. A. And Mr. A has filed his GSTR1 that is reflected in the GSTR2B of this recipient also. Number 3, sir, that third condition, this person has not received the goods. B has not received the goods. No. Why? Because B has ordered the A to ship the goods directly to C. Did B receive the goods here? No. B did not receive the goods. Since B did not receive the goods, he should not be eligible to take ITC. No. Practically, yes. But here they have given relaxation. Here they have given relaxation. So what they have told is, in case of bill to ship to transaction, it will be deemed that this person has received the goods. In case of bill to ship to transaction, this original buyer will be deemed to have received the goods and services. Even same logic will apply for services also. It will be deemed that this person would have received the goods and services, and it will be deemed that the third condition has been fulfilled, that is 16 subsection 2 clause B has been fulfilled, and he can claim the input tax credit of it. Now, talking from Mr. C's perspective, C doesn't have any trouble. Why? Because he will have an invoice which is given by Mr. B, and this B has filed his GSTR1 which has been reflected in his GSTR2B also. He in fact received the goods also. A has sent him the goods. No, he received the goods also. So for C there is no problem. Why? Because all the conditions he will be able to fulfill it. He will receive the goods. He will have a tax paying document that will get reflected in his GSTR2B. But problem is with Mr. B. Mr. B will not receive the goods here because it is a bill to ship to transaction. He asked his supplier to directly ship it to his customer. So he will not receive the goods. So that will be a violation of one of the conditions. That means he will never be eligible for claiming input tax credit. But the Act has recognized this genuine scenario and gave a relaxation. It will be deemed, in case of bill to ship to transaction, the original buyer would be deemed to have received the goods or services. The same logic will become applicable for services as well. So this is what the third condition. So how many conditions we have seen? 3 conditions we have seen. Then here there is one important clarification here. Clarification on availability of ITC in respect of works contract. So very important clarification is there. So let me try to put it that for you. Let me try to explain it for you. Right. I will quickly try to explain that circular, important circular. See, let us say there is Tata Motors. Now Tata Motors is having a factory. Let us say they are having a factory in Gujarat. They're having a factory in Gujarat. So now there is one dealer of Tata Motors. So now this dealer is buying, this dealer has ordered some 100 quantity of cars. This dealer has ordered for 100 quantity of cars from Tata Motors. Now Tata Motors is selling the goods on X works basis, or even it can be called as X factory basis. That means Tata Motors will deliver the goods at the factory gate of Tata Motors premises only. From there, who has to arrange the transportation and all is, that is buyer's responsibility. So this we call it as X works or X contract basis, X works basis or X factory basis. So Tata Motors says, okay, we will deliver 100 cars to you, but our responsibility will end at the factory gate. We will make that goods available at the factory gate itself. From the factory gate, you have to arrange for your transportation. So now what happened is, this dealer has arranged one transportation. This dealer has booked one truck. Now the truck has gone to that Tata Motors gate. So in that truck, all the vehicles are loaded. So let us say, for example, order was placed on somewhere around on 15th of April, order was placed. Now Tata Motors made that goods available at the factory gate. That means those goods are loaded in that vehicle on 20th of April. But these goods reached the dealer. These goods actually received by the dealer on 15th of May. So tell me, in which month this recipient will be able to avail the input tax credit? In which month he will be able to avail the input tax credit? So when he received the goods, 15th of May. That means he received the goods in May. Let us say, for example, invoice was given on 20th of April only. Invoice was given on 20th of April only. And this was filed by this person. This was declared in his return, in the April month return. In the April month return on or before GSTR1 due date, this is also filed. That means this will become available. If you look from the dealer's perspective, while filing the return for the month of April, he will be able to have invoice. And in his GSTR2B, the amount of ITC is also getting reflected. Now, can this dealer claim the input tax credit? Practically speaking, no. Why? Because when he has received 15th of May, When he has received 15th of May. So third condition says you should avail the ITC only when you have actually received the goods. But here he did not receive the goods. So practically speaking, since he has received the goods only in the month of May, while filing the return for the month of May only, you can claim the ITC. But here department has given one clarification. What clarification they have told us? In case of X works contract, or in case of X factory contracts, whenever the goods are made available, at the factory gate, at that time itself it will be deemed to have been received. So on 20th of April the goods are handed over by this Tata Motors at the factory gate, no. So from thereafter transportation responsibility and all is with the dealer, no. So it will be deemed as if the goods are received by this recipient on 20th of April only. So here also it will be deemed that in the month of 20, as on 20th of April only goods are received. That means in the month of April only goods have been received. So what will happen here is, so in the month of April itself it will be deemed to have been received and you can avail ITC. You need not wait till 15th of May. Okay, so this is what the circular they have told. So if one line summary I have to say it for this circular, right? See here, ITC can be availed in case of X works contract. ITC can be availed at the time of handover at the factory gate. The same principle applies to any X works contract where ownership transfers at the supplier's premises upon delivery to the recipient or the transporter. In case if the contracts are X works, in case if the contracts are X factory, whenever they are made available at the factory gate, either to the transporter or recipient, at that time only the goods would have been deemed to be received, and at that point of time itself you become eligible to avail the input tax credit. So this is what regarding third condition. So how many conditions we have seen? 3 conditions we have seen. Number 1. So what is the first condition? The first condition says you should have a tax paying document. Number 2, that ITC should have been reflected in your GSTR 2B. Number 3, should have actually received that goods or services. Thereafter, number 4, details of ITC in respect of the said supply communicated to the registered person under section 38 should not be restricted. So that means whatever ITC which is there reflected in your GSTR 2B, that should not have been restricted. Sometimes you will have tax invoice, you would have received the goods, that amount will be reflected in your GSTR 2B only, but it will be reflected in your GSTR 2B under not available category. So that means there will be restriction on availment of ITC. In case if such ITC, you have tax invoice, you have received the goods, amount is getting reflected in your GSTR 2B, but it is restricted, it is showing under not available category, you can't claim that input tax credit. So in order to claim input tax credit, whatever ITC is there, that should be shown in your GSTR 2B, but that should be in the available category. It should not be in the non-available category. So in our regular class, I have showed you practically what is this ITC available, not available, ITC reversal. So how practically GSTR 2B will look like, all these things we have seen. But here if I have to give you one single line summary, ITC whatever is available should not have been restricted. So generally when ITC will be restricted, sir. So when ITC will be generally restricted is, here it is saying ITC will not be available for inward supplies furnished by registered supplier. That means if you are buying the goods or services from a supplier who is a new registrant, if you are buying from a new registrant for certain period, for a short duration, if you are buying that goods or services from a new registered person for some duration, that ITC will be kept under not available category. And in case if you are buying from such a supplier who has made a default in the payment of tax, in case if your supplier has not made the payment of tax, then also it will be shown under not available category. Where output tax payable as per GSTR 1 or IFF exceeds the output tax paid in GSTR 3B. That means if your supplier has got rule number 88C intimation. Sir, what is rule number 88C intimation, sir? Let us say your supplier is such a fraudulent person where he is showing more outward supplies in his GSTR 1. Where he is showing more GSTR 1s. So let us, for example, in GSTR 1, 10 lakhs worth of outward supply he is showing. So why he is showing 10 lakhs worth of GSTR 1? Why? Because he has to pass on the credit. If he doesn't declare all his outward supplies in his GSTR 1, his recipients will not get the credit, no. So that's what he is doing in his GSTR 1. He is showing total 10 lakh rupees of outward supplies. But when filing his GSTR 3B, their actual payment of GST will happen, no. So when filing GSTR 3B, instead of 10 lakh rupees, he is showing his outward supply as 5 lakh rupees only. So he is declaring more outward supplies in his GSTR 1 so that he can pass on the credit. But in his GSTR 3B, he is declaring less outward supplies. So that means he is trying to pass more credit, but he is trying to pay less amount of GST. So in that case, to these fraudsters, there will be some intimation, rule number 88C intimation will be given. In case if you are a person, if you are buying goods from such a registered supplier to whom that rule number 88C intimation has been given and he is not responding to that, then also the ITC will be under restriction category. Similarly, in case if you are buying from such a supplier who has availed ITC of an amount that exceeds the credit that can be availed by him as per GSTR 2B during the prescribed period. So this is rule number 88D intimation. Sir, what is rule number 88D intimation? Let us say you are buying goods from such a supplier who is claiming more ITC in his GSTR 3B than shown in his GSTR 2B. So just now one condition I have told, you should claim ITC only that amount which has been reflected in your GSTR 2B. But you are buying from such a supplier who is claiming more ITC in his GSTR 3B than what is reflected in his GSTR 2B. Then also for you, it will be shown under not available category. And if your supplier has made a default in discharging his tax liability under 4912 read with Rule 86B, in case if you are buying from such a supplier who has violated the provisions of Rule 86B or other specified class of persons. See here, the irony here is your supplier is doing the mistake, for you ITC will be restricted. So here the irony here is your supplier is making some mistake. You are buying from such a supplier where your supplier has committed a mistake, ITC will be blocked for you. Okay, so these are not the non-compliance done by you. So if you read the sentence carefully, ITC will not be available for inward supplies furnished by registered supplier. So that means if you are a person, you purchased the goods from such a registered supplier who did this, who falls under these categories, like he's a new registrant, or he has defaulted in payment of tax, or to him 88C intimation has been given, or to him rule number 88D intimation has been given, or he has violated rule number 86B, or any other specified class of persons. So if you are supplier, you are buying from such a supplier who has committed these kind of violations, then also ITC will be restricted for you. For you, ITC will be restricted. Clear? So this is the fourth condition. Whatever ITC that is available or whatever ITC that has been communicated to you in your GSTR 2B should not have been restricted. It should not be under restriction category. It should be under available category. Next condition. Tax leviable on supply actually should have been paid to the government. So what they are saying? So as a recipient, you are claiming ITC, no? That amount should have been paid by the supplier to the government. Supplier should have paid the amount of GST to the government, then only they will allow you to take input tax credit. In case, if the supplier has made a supply, he gave you tax invoice. Sir, you made the payment also. I am a recipient, sir. I made payment to my supplier also. But that supplier waste fellow is not making the payment of GST to the government, sir. Then also will my ITC will be restricted? Yes. Then also you can't claim the input tax credit. So you are genuine person, you are a recipient, you made the purchase, you made the payment to the supplier, but your supplier is not filing GSTR 3B, he filed GSTR 1. So amount was reflected in GSTR 2B, you claimed it. Thereafter, that supplier is not filing his GSTR 3B. That means he is not making payment of taxes. Then what will happen? Then also the GST you can't avail it. But how this all will practically work out is, I will give you one simple scenario. So how this will practically work out? Yeah, this example if you take. So what actually will happen in case if the supplier is not making the payment of GST, what will happen? So let us say for example, there is one supplier. He made supply amounting to 1 lakh rupees. So 1 lakh with 18,000 rupees of GST. So that amount of tax invoice also he has given. So what he has given? He gave tax invoice for 1 lakh rupees with 18,000 rupees of GST. Okay. So what is the date of invoice, sir? On 25th of April 2025, he has given you invoice. So he gave you invoice of total 1 lakh and 1.18 lakhs worth of invoice he has given. 1 lakh rupees is the value of supply, 18,000 rupees is the GST. That invoice was given. And this fellow has filed his GSTR 1 also on or before due date for the month of April, on or before that 11th of the May. He has filed his GSTR 1 also. That was reflected in your GSTR 2B also. That was reflected in your GSTR 2B. So what you have done is, while you are filing the return for the month of April, you claimed ITC. While filing the return for the month of April, so you claimed input tax credit, 18,000 rupees of ITC you have claimed. But what this supplier is doing is, he is not filing his GSTR 3B. For the month of April, he filed GSTR 1. Why? Because if he doesn't file GSTR 1, his recipients will create a noise. No, hey boss, I purchased it from you. You did not file your GSTR 1. If you did not file your GSTR 1, it will not get reflected in our GSTR 3B. If it is not getting reflected in our GSTR 3B, we will not be able to claim ITC. So his recipients will create a noise. So that's why what he has done, he has filed his GSTR 1. And it was reflected in the recipient's GSTR 2B. And the recipient, you are one such recipient, you claimed input tax credit. But this fellow, what he is doing is, he did not file the GSTR 3B for the month of April. 3B, he did not file it. 3B, he did not file it. Okay, don't worry. Government will wait. So by 20th of May, he has to file GSTR 3B. He did not file it. Government will wait. Sir, he did not file it even in the next month also. He did not file it even in the next month also. No worries. The government will wait. Sir, how long the government will wait, sir? How long the government will wait like this? The government will wait till 30th of September. The government will wait till 30th of September following the end of the financial year for the supplier to file his GSTR 3B. So this initial supply was made in the financial year 25-26. The government will wait for this supplier to file his GSTR 3B till 30th of September following the end of the financial year. So what is the end of this financial year? 30th of March 2020, 31st of March 2026 is the end of the financial year. 30th September following the end of the financial year will fall on 30th of September 2026. So the government will wait till 30th of September 2026 for this useless supplier to file his GSTR 3B. Sir, till 30th of September 2026 also, if this supplier has not filed his GSTR 3B, then they will intimate to this recipient, boss, you have made a purchase from such a supplier who did not file his GSTR 3B. Please return the ITC whatever you have availed by 30th of November. So they will give you 2 months of time. So by 30th of September, they will intimate you. 30th of September following the end of the financial year, they will intimate you. Boss, you have made purchase from such a supplier who has not filed his GSTR 3B. We have waited till 30th of September following the end of the financial year. But that supplier has not filed his GSTR 3B. So that's why whatever ITC that you have taken, you reverse it. Sir, I made payment already. We are least bothered. Your supplier has not filed your GSTR 3B. You reverse your input tax credit. So by 30th of September, they will wait. Thereafter, they will intimate and they will give time till 30th of November to reverse that ITC. So you have to reverse that input tax credit. In case if you are not reversing it by 30th of November, after 30th of November, if you are reversing it, then you are required to reverse the amount of ITC you have availed along with interest. Along with interest at the rate of 18% per annum. So if you are reversing it by 30th of November, so they will intimate to you, no. So before 30th of November, if you are reversing it, no need to pay any interest, just reverse the amount of ITC. But in case if you are not reversing it by 30th of November, in case if you are going to reverse it after 30th of November, then you will be required to reverse the amount of ITC, whatever you have taken. Along with that, you will also be liable to pay interest at the rate of 18% from the date of utilization till the date of reversal. From the date of utilization, you will be liable to pay interest at the rate of 18%. Clear? Able to understand? So you have to be very careful about this. So this is what this condition 16 subsection 2 clause C, the tax leviable on such a supply should have been actually paid to the government. But this is how the scenario will actually practically work out. This is how the things will actually work out. So the government will wait for the supplier to file his GSTR 3B till 30th of September. Still, if he is not doing it, then they will give the intimation to the recipient to reverse the ITC amount by 30th of November. If you are reversing it by 30th of November, well and good. If you are not doing it, reverse the amount of ITC along with the interest at the rate of 18% from the date of utilization. Clear? Next one. So one more condition, one more, and sir, now one more thing I forgot it here. So let us say by 30th of November, I have reversed it. By let us say on 20th of October itself, I have reversed it. I have reversed my 18,000 rupees of ITC. So government has intimated me, department has intimated me. So I reversed 18,000 rupees I have reversed. So thereafter, I have reversed it. Whatever ITC I have availed, that I have reversed it. So thereafter, this supplier, after certain point of time, let us say in the month of March 2027, after 2-3 years, this person is coming and filing his GSTR 3B, sir. Who? Supplier. Since the supplier did not file the GSTR 3B before 30th of September following the end of the financial year, I have reversed ITC. But thereafter, this supplier is coming and filing his GSTR 3B. After I have reversed it, at some point of time in the future, if the supplier is filing his GSTR 3B, can I re-avail that reversed ITC? Yes. Yes. Then you can re-avail your reversed input tax credit. You have reversed it, no? Because your supplier did not file GSTR 3B. Later, if the supplier is coming forward and filing his GSTR 3B, can I re-avail that reversed ITC? Yes, you can re-avail that reversed input tax credit. There is no time limit for that. You can do the re-availment of reversed ITC. Next, one more last condition which is required to be fulfilled in order to avail the input tax credit is you must have filed your returns. Definitely no. Which return? GSTR 3B. Just because, don't be of a wrong notion that just because ITC is reflected in your GSTR 2B means you have availed it. No. So it will only show in the GSTR 2B, it will only show how much ITC you are eligible for. You have to claim that input tax credit. You have to avail that input tax credit by filing your GSTR 3B. Unless and until you file your GSTR 3B, you will not be able to avail that input tax credit. So don't be of a wrong notion. When it is getting shown in GSTR 2B, it is automatically credited. No, that is just will show you how much amount you are eligible for. You have to file your returns and claim that money. Okay, which return you have to file? GSTR 3B you have to file. So these are all the conditions which are required to be fulfilled. So repeat, what and all are the conditions which are required to be fulfilled for availing input tax credit? Number 1, you should have a tax paying document containing some minimum details. Number 2, that amount should have been reflected in your GSTR 2B. Number 3, you should have actually received that goods or services. Number 4, that ITC should have been, whatever ITC should have been communicated to you, it should not have been under restricted category, and that amount of tax should have been actually paid to the government, and you should file your return. GSTR 3B you have to file it, then only you can avail the input tax credit. Next, there are some provisos. There are some provisos to 16 subsection 2. Two provisos we have. What are the two provisos? First proviso to 16 subsection 2 says that in case if you are receiving the goods in lots or installments, in case if you are receiving the goods in lots or installments, sir, when I can claim the ITC? Let us say I have ordered some goods, 100 quantity of goods I have ordered, but these goods I am getting it in lots. In 5 lots I will get. Now these lots are spread across different months. Sir, can I avail full ITC on receiving the first lot? Or am I required to apportion my ITC for each lot and claim proportionate amount? Or should I wait till I receive the last lot to claim the ITC? Which is correct option? Last option. Last option. So government told you can avail ITC only on receipt of the last lot or last installment. So in case if you are receiving the goods in lots or installments, you can't claim ITC by along with the first lot, or you can't even apportion and claim the proportionate amount. You have to wait till you receive the last lot or last installment. Only after you have received the last lot or last installment, then only you can avail the input tax credit. That is the first proviso. Then we have second proviso. This is very, very important. Payment condition. So you should make the payment within 180 days. As a recipient, you should make the payment to the recipient. Sorry, as a recipient, you should make the supplier payment within 180 days. So that is there is a supplier who gave you invoice on 15th of April for GST amounting to 1 lakh rupees and 18,000 to the recipient. So now this sale has happened on credit basis. Now supplier has declared this tax invoice in his GSTR 1. He discharged his output tax liability. Recipient, the amount was reflected in his GSTR 2B. He claimed ITC. But now department says that by way of second proviso to 16 subsection 2, they say that this recipient should have made the payment within 180 days from the date of invoice. Date of invoice is 15th of April, no? So from 15th of April, 180 days you calculate. So within 180 days, this recipient should have made the payment to the supplier. Sir, what will happen if payment is not made within 180 days? What will happen if the payment is not made within 180 days? So if the payment is not made within 180 days, whatever ITC that has been availed by the recipient, that should be reversed. That should be reversed along with interest. Along with interest. Here no relaxation, nothing. If you are not making the payment within 180 days, then you are required to reverse ITC you have availed along with interest. From the date of utilization till the date of reversal, you have to calculate the interest at the rate of 18% per annum, and that interest you will be liable to also pay, not just a reversal of ITC. If you remember, in case if the supplier has not filed the GSTR 3B, if you are reversing it on or before 30th of November, then you are not required to pay any interest. But in case if you did not make the payment to your supplier within 180 days, then you are required to reverse the amount of GST directly along with interest. Government will not wait. You did not make the payment within 180 days, no? Now you have to reverse ITC whatever you have taken. Don't just reverse ITC. Reverse it along with interest at the rate of 18% per annum. Understood? So this is what second proviso says. You must make the payment within 180 days. Sir, what if I am making partial payment? Let us say out of this 1 lakh rupees, 50,000 I have already paid. 50,000 along with the GST I have paid. But balance 50,000 only I did not pay. Pending amount is balance 50,000 only. So 180 days is over, but pending amount I did not pay. So now whatever GST ITC attributable to that 50,000, proportionate amount of ITC only you are required to reverse. So what is ITC attributable to that proportionate amount? 9,000 rupees. So this 9,000 rupees you have to reverse it along with interest at the rate of 18% per annum. Sir, I paid 60%, I did not pay 40%. So ITC attributable to that 40% only you are required to reverse it. So whatever amount you did not make the payment within 180 days, ITC attributable to that amount should be reversed along with interest at the rate of 18% per annum. Understood? Sir, let us say I did not make the payment within 180 days. I have reversed my ITC along with interest. Thereafter, I am making payment, sir. Thereafter, after certain period of time, I am making the payment, sir. Can I re-avail my reversed ITC? Yes. Yes, you can do the re-availment of reversed ITC. So whatever ITC that you have reversed because you did not make the payment within 180 days, thereafter, after reversal, if you are making back the payment again to the supplier, then you can re-avail that reversed ITC. Sir, what about interest? Gone. Interest is gone. Interest, you are not going to get it back. Don't expect that government will give you back interest also. There is no way of getting interest back. But whatever reversal of ITC you have done, that you can re-avail it. Then that you can reclaim it. That is the maximum thing which you can do. Clear everyone? Right. So I told you two circumstances where you can do the re-availment of reversed ITC. Number one, in case if the supplier has not filed his GST at 3B, first you will reverse it. Thereafter, if the supplier has filed his GST at 3B, I can re-avail it. Second condition where you can do re-availment of reversed ITC is in case if you did not make the payment within 180 days from the date of invoice, you have to reverse it. Thereafter, if you are making the payment, you can do the re-availment. Understood? Right. However, this payment within 180 days condition will not become applicable in some circumstances. This payment within 180 days condition will not become applicable in some circumstances. There are some exceptions. What are they? So condition of payment within 180 days does not apply in the following situations. What are that situations? Number one, supplies on which a tax is payable under reverse charge mechanism. If you are a recipient, if you are only making the payment of GST under RCM, then that RCM input also you can use the credit. Whatever GST that you have paid under reverse charge mechanism, that also you can take it as credit. But in that case, there is no condition to make the payment within 180 days to the supplier. In case of RCM supplies, you can claim ITC, but there is no condition of making the payment within 180 days to the supplier. Second one, deemed supplies without consideration. If you remember the supply chapter, we have discussed schedule 1. There are 4 paragraphs which will be deemed as supply even if done without consideration. So there we are deeming those activities as supplies even without consideration. If there is no consideration only, what is the purpose of making the payment within 180 days? There is no consideration only. No. When there is no consideration, then what is the logic of putting that 180 days of payment condition? Because there is no consideration only there. One more case where the payment within 180 days will not become applicable is additions made to the value of the supplies on account of supplier's liability as per 15 subsection 2 clause B. So whatever addition you are doing it to the value under 15 subsection 2 clause B, for that addition which you have done to the value, for that payment within 180 days will not become applicable. Sir, what is that addition we have made to the value under 15 subsection 2 clause B? If you remember in the previous session value of supply, I told you one concept. Amount paid by the recipient to the third party on behalf of the supplier, which is the supplier's obligation, should be added. That wedding event management I have told. There was one supplier. So let me take you back to that example. Just 1 minute. Yesterday we have taken one example, no? Yeah, this one. So there is one supplier. So this supplier has agreed to provide event management services. Yes or no? So no, not this one. Where is it? PPA. This is time of supply. I guess this one. So there is a supplier who is providing catering services to a recipient. So as a part of that catering service, he is also required to provide soft drinks. So one day vendor has come on the day of wedding and he has unloaded all that 500 quantity of the drink bottles. Thereafter, he is asking for payment 10,000 rupees, but supplier is not available. Now he is creating a show. So what the recipient has done, okay boss, don't worry, I will pay you the 10,000. Just leave from here. So recipient paid 10,000 rupees to the third party, which is actually supplier's obligation. Now ultimately he has to pay only 90,000 to the supplier. So here, even though transaction value is 90,000 rupees, but we will make an addition under 15 subsection 2 clause B. How much? 10,000, amount which is paid to third party. On total 1 lakh rupees, 18,000 rupees of GST will be charged. Okay. So supplier will give, okay, let me put it this way. Supplier will give invoice. Here in this case, 90,000 rupees is the transaction value. 10,000 rupees will be added under 15 subsection 2 clause B. Total 1 lakh rupees. And on that 18,000 rupees of GST will be charged. So the recipient will take 18,000 rupees of ITC. But here payment condition is there. No, payment has to be made within 180 days. Yes or no? So now let us say this recipient is not making that payment to the supplier within 180 days. How much is the payment he is not making? 90,000 rupees payment he is not making. So tell me, should I reverse full ITC or ITC attributable only to 90,000? ITC attributable only to 90,000 I have to reverse. Why? Because this 10,000 rupees was added under 15 subsection 2 clause B. So for this amount, payment within 180 days will not become applicable. Why? Because that amount is already paid to the third party. So for that portion of value which was added to the value under 15 subsection 2 clause B, that for that payment within 180 days condition will not become applicable. So that's why this 90,000 ITC attributable to this 90,000 rupees only you are required to reverse. So that means if I calculate 18,000 rupees into 90,000 divided by total 1 lakh. So 90%, which will come to 16,800. 16,800 ITC only I am required to reverse. So ITC attributable to that 10,000 rupees which was added under 15 subsection 2 clause B, that need not be reversed, because for that payment within 180 days condition will not become applicable. Understood? Right? Important point. Next. So let us come back here. Fine. Right. So these are the three cases where payment within 180 days will not become applicable. So let us see what are the three cases where payment within 180 days will not become applicable. Number one, supplies on which tax is payable under RCM. Number two, those deemed as supplies, even those supplies which are mentioned under Schedule 3, which will be deemed as supply even without consideration. Number three, additions made to the value of the supply on account of supplier's liability under 15 subsection 2 clause B, whatever amount has been added. So for that also payment within 180 days will not become applicable. So this is what regarding 16 subsection 2. So what we have seen in section number 16 till now: 16 subsection 1, who is eligible for claiming input tax credit. 16 subsection 2, what are the conditions which are required to be fulfilled in order to claim the input tax credit. Now we will talk about section 16 subsection 3. Sir, what is section 16 subsection 3 is saying? Section 16 subsection 3 will talk about capital goods. So when it comes to capital goods, in case if you are buying a capital good, there are two options available for you. In case if you are buying capital goods, there are two options available for you. Number one, either claim ITC on it under GST Act or claim depreciation on the GST component. So there are two options. One, we have to choose. In case if you are purchasing a capital asset, you can't say, so let us say I am purchasing the capital goods for 10 lakh rupees, in which 1.8 lakh rupees of GST is also involved. So this 1.8 lakh rupees is there, no? This either you can claim ITC or you can capitalize. So if you are capitalizing means what? You are claiming depreciation. So both will not be allowed. Either you claim input tax credit. If you want to claim ITC of that 1.8 lakh rupees on your capital goods, in your books of account, you capitalize only 10 lakh rupees. If you want to capitalize total 11.8 lakh rupees and claim the depreciation under the Income Tax Act, then you don't claim the input tax credit. So either claim input tax credit or claim depreciation under Income Tax Act, not both simultaneously. So this is what 16 subsection 3 says. Thereafter we have 16 subsection 4, which is talking about what is the time limit for availing the input tax credit. What is the maximum time limit within which you are required to avail the input tax credit? Sir, can I, let us say for example, let me put it this way. Let us say, sir, there was a supply. There was one supply. I am a recipient, sir. I received one supply in the month of April. In the month of April 2025, there was one invoice. So while filing the return for the month of April, let us say for April month return, I will file it on 20th of May. GSTR 3B, I will file it on 20th of May, no? So while filing my return for the month of April, I did not claim ITC. Let us say 1 lakh worth of invoice I have. On that 18,000 rupees of GST is there. So because of some reason, that 18,000 rupees of ITC I did not claim. So I have an invoice also, that amount is reflected in my GSTR 2B also, I received the goods also. So all the conditions are fulfilled, but I forgot, let us say I forgot, or because of some reason, I did not claim the ITC in the month of April. So what will happen? Will I lose the right? If I did not claim the ITC, will I lose that right? No issue. For May month, you will file the return, no? For May month, you will file the return on 20th of June. In that, you can claim it. In that, whatever you have missed for the May month, April month, you can claim it. Sir, that also I did not do. No worry. You will file the June month return, no? You will file it somewhere around 20th of July, no? In that, you can claim the ITC. Sir, there also I did not do it. No issue. Claim it in the next month. Like this, how long, sir? Can I claim after 2 years? Can I claim after 3 years? No, there is one time limit. There is one time limit. So there is a maximum time limit within which you are required to claim that input tax credit. And what is the time limit? ITC on invoices pertaining to debit notes or invoices should be claimed at any time till 30th of November following the of succeeding financial year or date of filing of the relevant annual return, whichever is earlier. So what is the maximum time limit? They are saying 30th of November following the end of the financial year. So this is belonging to the financial year 25-26. 30th of November following the end of the financial year means what? 30th of November 2026 or date of filing of annual return. There will be date of filing of annual return, not due date, date of filing of annual return, whichever is earlier. So within that date, that will be the maximum time limit within which you will be permissible. You will be eligible to claim the input tax credit. Okay, so not beyond it. However, listen carefully. This condition, this time limit, 30th of November following the end of the financial year or date of filing of annual return, this time limit will not become applicable in cases of re-availment of reversed ITC. I told you about two cases where we will do re-availment of reversed ITC. In those two cases of re-availment of reversed ITC, this time limit of 30th of November following the end of the financial year or date of filing of annual return, this time limit will not become applicable. So what are the two cases where there is a possibility of re-availment of reversed ITC? Number one, in case if the supplier has not filed his GSTR 3B, then first you will reverse it. Thereafter, if the supplier has filed his GSTR 3B, you can re-avail. Number two, if the recipient did not make the payment within 180 days to the supplier, you are required to reverse. Thereafter, if you are making the payment, then you can re-avail. So these two are the circumstances where you can do the re-availment of reversed ITC. So for re-availment of reversed ITC, there is no condition becoming applicable. You can claim it after 3 years, 10 years, 15 years, whatever you want to do. At any time, you can come back and claim it. Okay, right. So this is this point. Then one more point I would like to explain it here. One more point. So this is what time limit under 16 subsection 4 doesn't apply for re-availing ITC. So one more point I would like to say it here. 16 subsection 6 time limit for taking ITC in case of revoked registration cancellation. So this will try to spend some time. This is one important area. So this is something which you might not have learned at your CA inter properly, but CA final level, they might ask a question on this. Listen. So let us say one example. With the help of the example, I will try to clarify. In April 2025, I have an invoice. But I did not claim ITC. So what is the maximum time limit within which I can claim the input tax credit? 30th of November. See, date of filing of annual return is also there. Let us say annual return was filed on its due date. Annual return was filed on 31st of December. Whichever is earlier means 30th of November only. So let us say 30th of November. Maximum time limit within which I can claim ITC. What is it? 30th of November following the end of the financial year. Because this is forming part of financial year 25-26. So 30th of November following the end of the financial year. This is the max time limit. This is the max time limit for what? For availing ITC. So maximum time limit for availing ITC is 30th of November 2026. But in between, what happened is, let us say my registration was cancelled. Sir, when your registration was cancelled, let us say my registration was cancelled on, let me put it this way, on 30th of October 2026, my registration got cancelled. Suo moto basis by the PO, like in the registration chapter we have seen. So cancel suo moto by PO. There are some circumstances where you are not filing the returns or you have committed some violations and all, then PO on suo moto basis, even without your application, PO on suo moto basis, he can come forward and cancel his registration. So that's what happened. On 30th of October 2026, my registration got cancelled, effective from that date only. So now what happened is, in case if the registration was cancelled by the PO on suo moto basis, you will be given an option under section number 30. You will be given an option to make an application for revocation of cancellation of registration. You will be given an option to submit an application for revocation of cancellation of registration. So you can ask for getting your registration back. So now what you have done is, using that option, you have made an application. Within 90 days we can do. So you have submitted an application for revocation, and ultimately what happened is, your registration was revoked. Your cancellation was revoked. So revocation of cancellation happened. Let us say, for example, revocation of cancellation happened on 31st of January 2027. By this date, they have given your registration back. So that means you will once again get back your registration effectively from the date of cancellation. Whatever is the date of cancellation, from that date itself, your registration has been revoked. That means your cancellation has been revoked. Now the problem is, when your registration was cancelled, that is from 30th of October 2026 till 31st of January, during that duration, you would not have filed your returns. Why you would not have filed your returns? Because during that period, your registration was under cancellation. If your registration is under cancellation, you can't file your returns, you can't make the taxable supplies, you can't file your returns. From the effective date of registration, whenever your cancellation was, from the effective date of cancellation, whenever your cancellation has become effective, from that date you will not be able to file the returns. Yes. So for this duration, you would not file the returns. But now what you will do is, for this duration, since you got your registration back, since you got your revocation, so from the date of revocation of cancellation, from that date, within 30 days, you have to file all the pending returns. From that date, within 30 days, from the date of revocation of cancellation, within 30 days, from the date of cancellation till the date of revocation, whatever pending returns are there, all that you are required to file within 30 days. So now you are filing your return here. Let us say you are filing your return on 15th of February. For duration from 30th of October till 31st of January, you are filing all your returns on, let us say, 15th of February. Within 30 days from the date of revocation you are doing. So now you wanted to claim the ITC. ITC is there. So one invoice was there in April month. No, 1 lakh worth of invoice is there. On that 18,000 rupees of GST is there. This you did not claim. You thought I can claim it till 30th of November. No, but you did not claim it. But you are filing now return on 15th of February 2027. Sir, can I claim ITC? He wants to claim this ITC in that pending returns, whatever he is filing, starting from 31st of October. So in that return, he wants to claim that ITC of 18,000 rupees. Can he claim it? Yes. Yes. Department has given the permission. So what they try to say here is, on the date of cancellation, by the time of effective date of your cancellation, if the time limit for claiming ITC has not yet expired. See, when your cancellation came into effect 30th of October, by the time still is the time available for claiming ITC? Yes, because you can claim it till 30th of November. So in that case, if you are getting your revocation of cancellation, you will file your pending returns within 30 days. No, in that returns, you can claim that unutilized, you can claim that unavailed ITC. Able to understand? But the condition is you should be eligible. As on the date of cancellation, you are still eligible for claiming ITC because time limit is not over. You have still 30th of November, but on the date of cancellation, I am still eligible. Time limit is not over. No issue. In that case, if you are getting your registration back, you will file all your pending returns within 30 days from the date of revocation of cancellation. So in that pending returns, file all your pending returns. Along with that, you can also claim that ITC, which you are eligible as on the date of cancellation. Understood? So that is what the next section they try to say it here. So if I say it, if a taxpayer's registration is cancelled and later revoked, they cannot file returns for the period from effective date of cancellation to the date of revocation. That's what in our example also I have told. So from the date of cancellation till the date of revocation, you will not be able to file the returns. If recipient has not claimed ITC on any invoice or debit note before the time limit under 16 subsection 4 lapses, they cannot claim ITC on that invoice or debit note. However, relaxation is provided, extending time limit under 16 subsection 4 to the date of return of filing. If the returns for the cancellation to the revocation period are filed within 30 days of revocation, provided ITC time has not already expired on the cancellation date. So in case if the ITC time limit has not already expired on the date of cancellation, then whatever pending returns you will file within 30 days from the date of revocation of cancellation, in that pending returns you can claim that ITC. Understood? Clear? Right. So this is what regarding section number 16. With this successfully we have completed section number 16, which is talking about eligibility and conditions for availing the input tax credit. Okay. So now we have to come to section number 17. Now we have to come to section number 17. So section number 17 will talk about two aspects. One is apportionment of credit and the other one is blocked credit. Section number 17 will talk about two concepts: apportionment of credit and blocked credit. Apportionment, we'll come back to that later. First, what we'll try to do is we'll try to complete the blocked credit concept. First, we'll try to complete the blocked credit concept. So thereafter, once we complete the blocked credit concept, then we will come back and understand apportionment related discussion. So first, let us try to understand blocked credit. Blocked credit. So this discussion has been contained in 17 subsection 5. So let us try to understand the conditions of blocked credit. What are the circumstances in which the credit will be blocked and all? So that we have to understand it. Fine. So now we will try to talk about blocked credit, a concept called blocked credit. Sir, what is this blocked credit? The name itself says, sometimes you are making some supplies, you are purchasing some supplies, be it goods, be it services. Sometimes there are certain kinds of supplies that if you are purchasing, that if you are procuring, you might be using it for business purposes only. You have an intention to use it for business purposes, or in fact you are actually using it for business purposes also, and you are a registered person and you complied with all the conditions given under section number 16. You complied with all the conditions given under section number 16. So you are a registered person, you are procuring some goods or services which you are using it, or you have an intention to use it in the course or furtherance of the business, and you are complying with all the conditions given under section number 16. That is, you are having an invoice reflected in 2B, so like that all conditions are also fulfilled. But still, if those items are falling under 17 subsection 5, if those supplies are falling under 17 subsection 5, then ITC will not be available. The government is saying ITC we will block. We will block. We will not let you take the ITC. Agreed, you are a registered person. Agreed, you are receiving that supplies for making for using business purposes. Agreed that you are complied with all the conditions given under section number 16. But still, we will not let you take the ITC. So if you are purchasing such supplies, ITC will not become available for you. Sir, what are that items on which ITC is blocked? So there is a very big list here. So we have to complete that one by one. So let us try to see it here. So what are that list of items on which ITC will be blocked? So let us see. First one. So I'm directly going into the discussion now. First one, motor vehicle for transportation of passengers with seating capacity of less than or equal to 13, including the driver. Ineligible motor vehicle. So the first category of item, the first supply on which ITC is blocked is motor vehicle. So if you are buying a motor vehicle, if you are purchasing a motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. So if you are purchasing a motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13 persons, then ITC is blocked. That motor vehicle, they are calling it as an ineligible motor vehicle. So if you pay close attention, the restriction on ITC is there only for motor vehicles designed to carry passengers. If you are buying motor vehicle designed to carry the goods, no restriction, you can claim ITC. So what is ineligible motor vehicle? Ineligible motor vehicle is only such motor vehicle which is designed to carry passengers. So if you are buying any motor vehicle designed to carry the goods, will it also be blocked? No, it will not be blocked. Similarly, if restriction is also there only on that motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. That means if you are buying a motor vehicle designed to carry passengers having a seating capacity of more than 13, will there be any restriction? No restriction. You can avail full ITC. So the restriction is there only on ineligible motor vehicle, that is a motor vehicle designed to carry passengers, that too which should have a seating capacity of less than or equal to 13 persons. But however, if you are buying that ineligible motor vehicle, but if you are using it for some eligible purposes, then you can avail ITC. Sir, what are that eligible purposes? Even though if I am buying an eligible motor vehicle, but if I am using it for eligible purposes, then I can claim ITC. What are that eligible purposes? But before we talk about what are that eligible purposes, first let us try to understand what is an motor vehicle. And particularly, I want to shift your focus to what is excluded from the motor vehicle definition. Even though they might look like motor vehicle, but these things have been excluded from the motor vehicle definition. What are they? Vehicles running on fixed rails, railways, railway coaches, rails and all, they are not considered as vehicles. That means if someone is buying that rails and all, can they claim ITC? Yes, because that has been excluded from the motor vehicle definition. Similarly, special purpose vehicles for being used in factory on any enclosed premises. Like for example, inside the factories you will find some white kind of vehicles which is used only within the factory. Similarly, in the golf courts and all, you will find some vehicles which will run only within that golf court. So that also will not fall under motor vehicle definition. So if they are not falling under motor vehicle definition, can they claim ITC? Yes. Similarly, vehicles with less than 4 tires, 4 wheels fitted with engine capacity up to 25 cc. So any motor vehicle which is fitted with less than 4 vehicles and having an engine capacity only up to 25 cc, they are also not falling under motor vehicle definition. So if these three things are not falling under motor vehicle definition, that means ITC is not blocked. That means they can avail ITC, full ITC, they can avail, no restriction on this. What are that excluded from motor vehicle definition? So rails and special purpose vehicle which will move only within an enclosed premises, or vehicles with wheels, or vehicles with less than 4 wheels fitted with engine capacity up to 25 cc. So these are not falling under motor vehicle definition. If they are not falling under motor vehicle definition, they can claim, we can claim full ITC. But as I was saying, even though if you are buying an ineligible motor vehicle, let us say I am purchasing a car. Car means, let us say seating capacity 5. So car is designed to carry passengers having seating capacity less than or equal to 13. So it is an ineligible motor vehicle. So ITC is not available for me. ITC is not available. However, if I am using it, if I am purchasing that car, but I am using it for eligible purposes, then I can claim ITC. Sir, what are that eligible purposes? Number 1, for making further taxable supply of such motor vehicle. If I am buying the car and I am selling the car, or if I am buying the car and renting the car, anything. Further supply could mean anything. If I am buying the car and selling the car, if I am buying the car and renting the car, that will fall under further supply. Then I can claim ITC. Number 2, if I am making taxable supply of transportation of passengers, if I am buying a car, using that car, I am providing cab services. So I am making a taxable supply of transportation of passengers, I can claim ITC. Or if I am making taxable supply of imparting, training or driving such motor vehicles. If I am buying a motor vehicle, but using that motor vehicle, I am running a driving school whereby I am delivering, whereby I am providing the services of training or imparting skills on training, imparting training or driving of such motor vehicles. Can I claim ITC? Yes, you can claim ITC. Understood? So practically speaking, ineligible motor vehicle, but when you are using it for these 3 eligible purposes, then you can claim ITC. What are that 3 eligible purposes? If you are using it for making further supply, if you are using it for the purpose of making taxable supply of transportation of passengers, and if you are using it for making taxable supply of imparting training or driving of such motor vehicle, then you become eligible to take the ITC. Clear? So that is the first blocked credit. Thereafter we have vessels and aircrafts. Vessels and aircrafts. Even if you are purchasing a vessel, sir, vessel means what? Usually a ship. So if you are buying a vessel or if you are buying an aircraft, even vessel and aircraft is also ITC blocked. Even on vessels and aircrafts also, ITC is blocked. However, there are some exceptions. Even these vessels and aircrafts also, if you are using it for eligible purposes, even vessels and aircrafts also, if you are using it for eligible purposes, then you can claim input tax credit. Sir, what are that eligible purposes? Number one, if you are using it for making a further taxable supply, I am buying an vessel or aircraft for further supply. For example, I am buying vessels, selling vessels. I am buying vessels or renting it. So if you are engaged in making further supply of vessels and aircrafts, then you can take ITC. Number two, if you are making taxable supply of transportation of passengers, let us say if Indigo Airlines purchased a vessel for the purpose of supplying, for the purpose of making a taxable supply of transportation of passengers, can Indigo Airlines claim the ITC on the aircraft? Yes. Making taxable supply of imparting, training or navigating such vessel. So if you are buying a vessel, but using that vessel, you are providing the services of navigating a vessel. That means how to navigate the vessel and all. Driving school, once again. For cars, we say driving school. Here we say navigation academy. And if you are making a taxable supply of imparting training on flying such aircrafts, so you are buying an aircraft and using that, you are providing the skills on how to fly an aircraft. Or if you are using it for transportation of goods, if you are buying a vessel, if you are buying an aircraft for using it for transportation of goods, not for passengers, if you are using it for transportation of goods, then also you can enjoy the input tax credit. So first blocked credit is motor vehicle having a seating capacity less than or equal to 13. Second item which is falling under blocked credit is vessels and aircrafts. But in both the cases, if you are using it for eligible purposes, then we can claim ITC. Next, let us come to the third one, blocked credit. So now what is the third point? What they try to say here is, let us say if you are buying a vessel, or if you are buying an aircraft, or if you are buying a motor vehicle. On purchasing a vessel, aircraft or motor vehicle, if you are unable to take ITC, if ITC is blocked for you. I am a chartered accountant, I am purchasing a motor vehicle, I am purchasing a car for using it for official purposes, but ITC is blocked. Or I am buying a vessel, I am buying an aircraft, ITC is blocked. So if ITC is blocked on vessel, aircraft or motor vehicle, so for that vessel, for that motor vehicle, I will take insurance, no? On that insurance also I will pay GST, no? Even on that insurance also I can take ITC. For this vehicle, vessel or aircraft, I will undergo repairs, no? On that repairs also I will pay GST, no? That GST also I can't avail as ITC. For that vessel, aircraft or motor vehicle, I will undergo service. For that service also I would have paid GST. On that also I can't avail ITC. So one simple logic, if you are ineligible to take the ITC on motor vehicle, vessel or aircraft, even on its general insurance, even on its repairs and maintenance, even on its service also, even on its servicing also, whatever ITC you have paid, you can't avail ITC. Simple thing. So in case if you are eligible to take ITC on motor vehicle, vessel and aircraft, even on its general insurance also you can take ITC, even on its repairs and maintenance also you can take ITC, even on your servicing cost also you can take the ITC. That's what a thumb rule. So if you are eligible to take ITC on motor vehicle, vessel or aircraft, even on its insurance, repairs and maintenance and servicing also you can take ITC. If you are ineligible to take the ITC on motor vehicle, vessel and aircraft, you will also be not eligible to take the ITC on this insurance, repairs and maintenance and also servicing cost. Clear? However, they told one more thing here. The services of this general insurance, repairs and servicing will be available for manufacturers. In case if these services are availed by the manufacturers of that motor vehicles, vessels and aircraft, then also they can take ITC. Let us say Tata Motors is there. It is into manufacturing of business of motor vehicles and they have taken insurance for the motor vehicles they are manufacturing, or they are incurring some service and repairs cost for the motor vehicles which they are manufacturing. Can they take ITC? Yes. So services relating to general insurance, repairs and servicing that can be availed by the manufacturers of that motor vehicles, vessels and aircrafts. Not just that, on that ITC can also be availed by general insurance companies. On that ITC, on this general insurance, repairs and maintenance, ITC can be availed by that general insurance companies also in respect of cars which are insured by them. In respect of cars which are insured by them. I will give you one simple example here. Right. So what are you trying to say, sir? So what am I trying to say here is, so let us take this example. I purchased a car. I purchased a 4-wheeler. I'm a chartered accountant. I purchased a car. On this car, I have paid GST. Can I claim ITC of that? No, I can't claim ITC. What I have done is I took insurance. Let us say I paid 10,000 rupees of insurance. On that, I have paid 1,800 rupees of GST also. Can I claim ITC? No, I can't claim ITC on that insurance also. Because since I am unable to claim GST on the car, even on the general insurance also, I will not be able to claim any GST. Thereafter, I was driving the car. This car met with an accident. Now, this car, I took it for repairs. I need not worry. Why? Because I have paid the insurance, no? I paid insurance. So for this repairs and expenses, all are have to be borne by this insurance company only. So now I have undergone the repairs. Now repair cost came to 1 lakh rupees. Amount of GST is 18,000. So total 1 lakh 18,000 worth of repairs have taken place. Now these repairs will be given invoice in the name of this Max Insurance, because they have to bear. No, I have took an insurance policy with the Max Insurance. They have agreed to compensate for my damages. So now my vehicle met with an accident, so I am making a claim with the Max Insurance. Now they have to reimburse me this, or they have to incur these expenses, total 1 lakh 18,000. Sir, can this Max Insurance, whatever amount they are paying, 1 lakh 18,000 for undergoing the repairs in respect of the vehicle whatever they have insured, can they claim the ITC of this 18,000 rupees? Yes, Max Insurance can claim the ITC of that 18,000 rupees. They can claim it. Why? Because they are incurring that cost in respect of the vehicles whatever they have insured. So they can take the ITC of that. Understood? Clear? So that is what the third point. Services of general insurance, servicing, repairs and maintenance insofar as they relate to motor vehicles, vessels or aircraft. Now, one more thing here. One more last thing here regarding motor vehicles. So now what some people have started thinking is, sir, if I am buying a motor vehicle, vessel or aircraft, you are saying that I am ineligible to take the ITC. I will do one thing. Instead of buying it, I will take it on rent. Instead of buying it, I will take it on rent. So GST Act is saying, if I am purchasing a motor vehicle, or if I am purchasing a vessel or aircraft, and if I am not using it for eligible purposes, if I purchase it, then ITC is not available. I will do one thing. I will not do the purchase. I will do renting. I will take that vehicle, motor vehicle, vessel or aircraft on lease. Renting or lease I will do. On that I can take ITC. No, sir. No. Here they have told no. Not possible. So in case if you are ineligible to take the ITC on the purchase of motor vehicle, vessel or aircraft, even on its leasing or renting also, you can't avail the input tax credit. Why? Because this will be because if they don't put it, people will do like this. People, instead of buying the motor vehicles, vessels and aircraft, they take it on lease. Why? Because on lease they can take ITC. So like that, people will try to override the law. So that's why what they have told is, if you are ineligible to take ITC on the motor vehicle, vessel or aircraft purchase, even on its renting or leasing also, you will not be able to take the ITC. However, there are some exceptions. In some cases, ITC can be availed. So what are that exceptions is, let us say for example, there is some IT company. There is some software company. This company is taking some motor vehicle, is taking some vehicle on rent or lease. They are taking a car. So sorry, they are taking some car on lease or rental. So why they are taking that car on lease or rent is because they wanted to provide transportation services to their employees. And this company has to do that as per statutory obligation. They are under a statutory obligation to provide transportation facilities to their employees. For that purposes, they are taking that car on lease or rent. In that case, they have given relaxation for these companies for the purpose of taking the input tax credit. Then they can take the input tax credit. In case if any entity is availing the services of renting or lease of a motor vehicle to provide them to the employees under some statutory obligation, if they have a statutory obligation to provide the transportation facilities to the employees, to fulfill that, if they are taking that motor vehicle on rent, then they can claim the ITC. Sir, what if they purchase? What if this IT company, instead of taking the rent, if they purchase the car and providing the transportation facilities for the purpose as per statutory obligation, can they take ITC? No, they can't take ITC. If they are purchasing, they can't take ITC. But if they are taking it on rent or lease, they can take ITC. Able to understand? Sir, what if they purchase a bus? On bus, anyhow, it is not an ineligible motor vehicle. No. The ineligible motor vehicle is what? A motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. A bus will have a seating capacity more than 13. So that is not an ineligible motor vehicle only. Can they take ITC? Yes. On bus, they can happily take the ITC. There is no restriction. There is no blockage of rate in respect of a bus. Okay, I'm talking about the cars. So one exception of renting or leasing of motor vehicles where they can claim the ITC is in case if that recipient is using that services to provide the facilities to the employees under a statutory obligation, then they can claim the ITC on that renting or leasing of the motor vehicles. And one more case where ITC on renting or leasing of motor vehicles is allowed is, let us say for example, you are getting the services of renting or leasing a motor vehicle. You are a recipient and you are also doing the same line of business. You are also doing the same kind of outward supply. Let us say you are taking a motor vehicle on rent or lease, and you are also giving that motor vehicles on rent or lease once again. That means if your inward supply and outward supply both are same, then you can take ITC because you are into same line of business. Or let us say you are not into same line of business, you are into different line of business, but you are using it as one of the element of composite of mixed supply. You are using it as one of the element of composite or mixed taxable supply. Sir, what is it? Let us say there is one resort. There is one resort. Now what this resort is doing is, this resort management is taking on lease some off-roading vehicles like Thar and all. They are taking this vehicles on lease. Sir, why they are taking this lease on lease? Because in their resort, to the customers whoever are arriving, for them they are providing composite supplies. What is a composite supply? So this resort, if you want to book a package in this resort, so they will give you accommodation. They will give you accommodation. They will also give you food. Along with that, they will also give you one vehicle for off-roading. Vehicle also they will rent it out for off-roading. So this resort is making a composite supply or mixed supply, in that one of the element is renting of motor vehicle. So in case if you are receiving the services of renting or leasing of motor vehicle, and if you are into same line of business, then you can claim ITC. Or you are receiving the services of renting or leasing of motor vehicle, and you are using it as one of the element of composite or mixed outward supply which you are doing, then also you can claim ITC. Able to understand? So this is what regarding leasing and renting services. So if you see here, leasing or renting or hiring of the motor vehicles, vessels or aircraft on which ITC is not allowed. Exceptions: such as services when used for making an outward taxable supply of same category of services, or either as an element of taxable composite or mixed supply, just now as I have told. Or when such services when provided by employer to its employee under a statutory obligation, then also they can enjoy the input tax credit. Then there is no restriction. Understood? Now, so this is what regarding motor vehicles related cluster of blocked credit. So before we proceed further, I would like to tell you one more thing here. So now one circular I want to explain. Sir, dealers will be there, no? Dealers will be there. Vehicle dealers will be there, no? Sir, they will purchase demo vehicles. They will have demo vehicles. Let us say, for example, Tata Motors is there. They are into business of selling of this vehicles, motor vehicles they will sell. Let us say, for example, some 100 motor vehicles they have purchased. 100 Nexon models this dealer has purchased. Now, out of this 100 models, 99 models he will make further supply. 100 cars he has purchased. Out of that, 99 cars he will supply. He will make a further supply. But one car he is going to use it as a demo vehicle. One car he is going to use it as a demo vehicle. Sir, what do you mean by demo vehicle? Today, if you want to go to a dealer and if you want to purchase a car, first you have to do the test drive. People would like to do the test drive. Without doing the test drive, people will not be able to purchase it. People will not be able to get the feel, how the car will look, how the car will feel when driving and all. So that's why one vehicle, whatever he has purchased, that he is going to use it for demo vehicle. That he is going to keep it for demo vehicle purposes. Now, when it comes to these 99 vehicles, there is no doubt these 99 vehicles are purchased with the intention of making a further supply. With the intention of making a further supply, he can claim ITC on that, no doubt. But what about this one demo vehicle? What about this one demo vehicle? See, it is an ineligible motor vehicle. But ineligible motor vehicle, you can claim ITC only when 3 eligible purposes are permitted. So either you are using it for making further supply, or you are using it for making taxable supply of transportation of passengers, or you are imparting driving skills. But this one demo vehicle is not getting used for making further supply. You are not making further sale of it. You are not using it for transportation of passengers. You are not using it for either imparting or driving skills. So whether on this one demo vehicle, one PO told, since it is not getting used for further supply, since it is not getting used for making taxable supply of transportation of passengers, since it is not getting used for making imparting or providing driving skills, so on this one demo vehicle, I will not allow the ITC. Like that one PO has argued. Now department has given a circular, CBIC has given a circular stating that no, even these demo vehicles are also used in the course or furtherance of business only. Even this one demo vehicle is also getting used in the course or furtherance of business only, because if a customer has to come and purchase a vehicle, he will not purchase it unless and until he will have a test drive. Yes or no? So that's why if this demo vehicle is also getting used in the course of making that further supply only. So even on that demo vehicle also you can claim the ITC. That's what the circular has been given by CBIC. CBIC has given that circular. Even on the demo vehicles also you can claim ITC. There is no blockage of that because it is also deemed to be used in making further supply only. Clear about it? Understood? Right. Next. So this is one block. Next, let us come to further categories of the blocked credit. So we have some services here. So ITC is blocked on the following. They have categorized some services on which ITC is blocked. So food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life and health insurance services. On this ITC will always be blocked. So what are that list? You tell me. Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance. If anyone is availing these services, on that ITC will be blocked. However, exceptions are there. That means in some cases this ITC will be on these services, ITC will be available. When, sir? Same. If the recipient of the services is also engaged in same line of business, you are receiving food and you are using it and you are making further supply. If you are receiving outdoor catering services and if you are making the same kind of supply. If you are receiving beauty treatment services, if you are also into same line of business. So if either the person, if the above are used by registered person for making an outward taxable supply of same category of goods or services, or either as an element of taxable or composite or mixed supply. I already gave you example how it could be one of the element of a composite or mixed supply. So if the recipient is either using it for making same outward supply, or he is using it as one of the element of the composite or mixed supply, then that recipient can avail ITC on these specified services. Thereafter, membership of a club, health and fitness center. So even this membership of a club, health and fitness center, you can't avail ITC. Travel benefits extended to employees. If any travel benefits are given to employees on vacation, such as leave, home travel concession, on that leave travel benefits also, there is no ITC. However, if these goods or services specified, this 1, 2 and 3, if these goods are received by a recipient in order to provide the same to their employees under a statutory obligation, then ITC will be allowed. In case if these services 1, 2 and 3, if these services are received by a recipient who is an employer to provide the same to his employees under some statutory obligation, there must be a statutory obligation to provide these things to the recipient. In that case, if the employer is receiving it to provide the same to his employees under some statutory obligation, then that recipient can avail the input tax credit. Next, we have C and D, both are talking about immovable properties. Let us try to complete both of them in one go. Very simple clauses only. So I will try to explain it. So let me see whether I have any ready notes available. Okay, perfect. This I have. What is it? Come on. So what they are trying to say. Fine. So let us come here. So first thing what they say is, in case if you are a recipient who is a registered person, and in case if you are receiving works contract services in relation to an construction of an immobile property. If you are a registered person, if you are receiving any services relating to works contract. Sir, what is a works contract? Works contract relates to such a service where supply of goods is also involved, supply of services is also involved in relation to an immobile property. If someone is providing the services in relation to immobile property, which involves a supply of the goods also, supply of the services also, that I call it as works contract. Simply if I have to put it, I have a piece of land. On that piece of land, a building has to be constructed. Now one contractor came forward. He told, sir, you give me 1 CR, I will construct that building for you. Now as a part of that supply, he will supply me the goods also, like whatever cement, sand and all are required, that he will only supply. Along with that service also he is doing. So that I call it as works contract. So if you are a registered person and if you are receiving the works contract services in relation to a construction of immobile property. So let us say 1 crore is the works contract value, 0.18% GST, total 1.18 CR worth of works contract services in relation to immobile property you are receiving. Now this section 17 subsection 5 says that ITC is blocked on this works contract services in relation to construction of an immobile property. Whatever GST that you have paid, this 18 lakhs worth of GST, whatever you have paid, that ITC we will not allow. ITC is blocked on works contract services in relation to construction of an immobile property. If you are receiving any works contract services and in relation to construction of an immobile property, on that works contract services, ITC will be blocked. That's what they have told. This ITC will not let you take the input tax. This GST will not let you take the input tax credit. However, there are some exceptions. In some cases, even though you are receiving the works contract services in relation to immobile property, you can take the input tax credit. You can avail the input tax credit. When, sir? Sir, when ITC will be eligible? What are the exceptions? Number 1, if that expenditure, if that works contract, whatever you are receiving, it doesn't qualify as a capital expenditure, it is revenue expenditure. If you are receiving works contract services in relation to an immobile property, which will not qualify as capital expenditure as per the accounting standards. It is a revenue expenditure. It is such an expenditure which will be charged to the statement of P&L. On that, you can take ITC. So restriction is there only when that works contract expenses is eligible for getting recognized as capital expenditure in the books of accounts of the recipient. Then only ITC will be blocked. In case if that works contract expenditure does not qualify as a capital expenditure, if that is getting charged to the statement of P&L, on that no restriction is there, you can claim ITC. Similarly, you are receiving works contract services in relation to an immobile property, but if that immobile property is qualifying under plant and machinery definition, if that immobile property, whatever you are constructing, if that is falling under plant and machinery definition, then you can claim ITC even though you are capitalizing it. Sir, what is plant and machinery? This is what the plant and machinery. So here it is also an immobile property. Here also some contractor came and told, sir, I will construct this plant and machinery for you for 50 lakh rupees, on which he is charging GST. Sir, can I claim this 9 lakh rupees of ITC? Yes. Why? Because here the immobile property which is getting constructed is falling under plant and machinery definition. So if you are receiving works contract services in relation to construction of an immobile property, but which is falling under plant and machinery definition, then you can claim ITC. So this 9 lakh rupees, can I claim ITC? Yes. But here it is very much necessary for us to understand what is this plant and machinery. Plant and machinery, what will come here, what will not come here in the plant and machinery, that is very important. So what is plant and machinery? It means apparatus, equipment, machinery fixed to earth by foundation or structural support used for making outward supply of goods or services. So it includes any apparatus, equipment, machinery fixed to the earth by foundation or structural support. So if you come here, so this machinery, this apparatus, this foundation, this structural support, everything will fall under plant and machinery definition. So it even includes foundation or structural support also. But what is excluded from the plant and machinery definition? Land is excluded from plant and machinery definition. Building is excluded from plant and machinery definition. Other civil structures, telecommunication towers are not plant and machinery. Pipelines laid outside the factory premises is also not plant and machinery. Pipeline laid outside the premises is also not a plant and machinery. That means pipelines laid inside the factory is a plant and machinery, but pipelines laid outside the factory is not a plant and machinery. So this exclusion part is very important. If something is excluded from the plant and machinery, ITC will be not available. If something is included in the plant and machinery definition, and if you are receiving works contract services in relation to that plant and machinery, ITC will be eligible. So that's why here exclusion part is very, very important. You have to remember this. What will be excluded from the plant and machinery definition, that you have to compulsorily remember it. So this is what regarding works contract services in relation to an immobile property. Now we have one more thing. Sir, let us say I am not, and one more exception is also there. In case if the recipient is into same line of business. In case if the recipient of that works contract services is into same line of business. Let us say I am a main contractor. I got one contract from one person to construct building. So what I am doing is I am outsourcing it to another works contractor. So I am receiving works contract service, but I am also into same line of business. That means I am another works contractor. So I am receiving works contract services to make same supply. So then also I can take input tax credit. If I am into same line of business, then also you can take the input tax credit. Understood? And one more thing. Sir, let us say I am not receiving works contract service. I am doing self-construction of immobile property. I am not receiving works contract services. I am doing self-construction of immobile property. Sir, what do you mean by self-construction of immobile property? Self-construction of immobile property means I will buy the goods separately. I want to construct an immobile property. For constructing that immobile property, whatever goods I want, I will purchase that goods separately. For constructing that immobile property, whatever services I want, I will receive that services separately. That means I will buy the goods separately. I will bring the labor under my own supervision. Immobile property will be constructed. Sir, can I take ITC on that? No. Why? Because if they have allowed it, nobody will do works contract of immobile property. They will do the self-construction of their immobile properties only. So that's why what they have told, either you are availing works contract services or you are doing the self-construction of immobile property on your own. Even on the self-construction of immobile property also, we will not let you take the input tax credit. However, here also the same three exceptions. In case if that immobile property is not getting qualified as capital expenditure, if that is getting charged to the statement of P&L, then you can take ITC. And if it is qualifying as plant and machinery, you are doing self-construction of immobile property, but that immobile property is falling under plant and machinery definition, then also you can claim ITC. And if the recipient is not doing the construction on his own account, I am doing the construction, but not for my own account. I am doing construction for others. I am a builder. I am receiving goods. I am doing construction of immobile property, but not for me, for my client. Then you can take the ITC. Okay, so even self-construction of immobile property also you can't take ITC. However, 3 exceptions are there. If it qualifies as revenue expenditure, you can take ITC. If it qualifies as plant and machinery, you can take ITC. And if you are doing the construction for others, if you are not doing the construction of that immobile property on your own account, if you are doing the construction for others, then also you can take the input tax credit. Understood? So these are the blocked credits related to immobile properties. So work contract services we have covered, self-construction of immobile property we have covered. Then thereafter, let us see further categories of the supplies on which ITC is blocked. 17 subsection 5 clause E we have inward supplies charged to tax under composition scheme. Let us say you are a registered person. You are buying the goods or services from another registered person, but your supplier is a composition dealer. Can you take ITC? No. Why? Because if you remember, while discussing the composition levy chapter, I have clarified on one point clearly. Composition dealer can't avail input tax credit. Composition dealer can't pass on the input tax credit. Yes or no? This point we have already covered. So in case if you are a registered person, if you are buying goods or services from another registered person, but he has opted for composition scheme, from that person, whatever purchase you are making, you can't avail ITC on that. ITC is blocked. Next, inward supplies received by a NRTP. Similarly, if there is a person NRTP, if he is coming to India and he is participating in some expo, or he's doing something, let us say for example, and for IPL matches, one foreign player has come to India to participate in that IPL match. Now he might be, as an NRTP, to make that outward supply, he might be receiving various inward supplies, but they are telling that for a NRTP, he can't claim ITC on his inward supplies. A NRTP has no fixed place of business in India, so ITC is not available on goods or services received except for tax paid on imported goods. So if this NRTP is importing any goods, on imports also there will be IGST. So on import, if he has paid any GST on imports of goods, on that import of goods, GST, whatever he has paid, on that only he can take ITC. Locally procured goods and services he can't take ITC. Locally procured services he can't take ITC. Imported services also he can't avail ITC. So for NRTP he can avail ITC on only one thing. What is it? Tax paid on imported goods. If you are importing some goods, on that if you have paid any IGST, that IGST you can claim it as credit. You can't claim ITC on locally procured goods or services. You can't even claim ITC on import of services also. Only GST paid on imported goods NRTP can avail ITC. Next, input supplies used or intended to be used for CSR activities. If some company is procuring the goods and those goods are required to be used for fulfilling the CSR activities, CSR requirements, fulfilling CSR requirements, to fulfill your CSR obligations, you are procuring some goods, you are procuring some services on which you have paid GST. Can I claim ITC of that? No. Next, inward supplies for personal consumption, that is once again related to non-business use only. If you are buying some goods and services for personal consumption of directors, for personal consumption of employees, so like that, if you are buying any goods or services for personal consumption, then also ITC will be blocked. Thereafter, free samples, gifts, goods stolen or lost. Right. So in case if you have purchased some goods, but that goods you are distributing it as free samples. If you are distributing it as free samples, no output tax liability. If there is no output tax liability, no input tax credit. Also, you have to reverse the ITC if you have already taken. If you have purchased the goods, but those goods you are giving it as gifts. If you are giving it as a gift, if there is no output tax liability, there is no input tax credit. If you have purchased some goods, those goods are lost. Those goods are lost. So if the goods are lost, ITC is also lost. If you have purchased some goods, those goods are stolen. If the goods are stolen, ITC is also stolen. Stolen in the sense you have to reverse it off. Able to understand? So this is what regarding free samples, gifts or goods lost or stolen. So in case of free samples, gifts or goods lost or stolen, ITC will also be gone. And thereafter, one more case where ITC will not be available is tax paid in fraud cases, detention, confiscation, etc. So whatever tax you are paying under fraud cases, detention, confiscation, on that also ITC is blocked, but only up to financial year 23-24. From financial year 24-25 onwards, you can take ITC. Right. So this is what regarding various circumstances in which ITC will be blocked under 17 subsection 5. So we have covered 17 subsection 5. But if you remember, what did I say? Section number 17 will talk about two aspects. Section number 17 will talk about two aspects. One is blocked credit. One is apportionment of credit. Other one is blocked credit. Okay. So now what we have done is we are done with the blocked credit related discussion. So we have seen list of all that supplies on which ITC will be blocked. List of all the supplies on which ITC is blocked we have seen. But there is one more concept covered under section number 17, which is apportionment of credit. Sir, what is this apportionment of credit? Let us try to understand it. So what is this apportionment of credit, sir? See, In case if you are buying some inward supplies which are completely getting used for business purposes, you are getting some inward supplies which are going to completely use it for business purposes. Can you take ITC? Yes, take full ITC. Let us say if you are receiving inward supplies which you are going to completely use them for non-business purposes, which you are going to completely use them for non-business purposes. Can I take ITC? No, no ITC, not even a single rupee of ITC, you can't claim it. Let us say you are receiving an inward supply which you are going to partly use it for business purposes also and partly for non-business purposes also. You are receiving some inward supplies which you are going to use it partly for business purposes, partly for non-business purposes. Sir, then what I should do? Proportionate ITC only you are required to avail. Proportionate ITC only you are required to avail. That means whatever GST that you have paid on that inward supplies which you are going to use it for business as well as non-business purposes, on that you might have paid some GST, but you can't avail full ITC, only proportionate amount you have to take. Now how to do that apportionment? How to do that apportionment? A question will come now, that's what we are going to answer now. How to apportion it, that's what we are going to answer now. Similarly, one more thing if I tell you, there are inward supplies which you are going to use it for taxable supplies, only for taxable supplies. When I say taxable supplies here, it includes zero rated supplies also. When I say taxable supplies here, it includes even zero rated supplies. So whenever you are using inward supplies for taxable as well as zero rated supplies. Sir, what is zero rated supply? Exports or supplies made to SEZs. Exports you are making or supplies you are making into SEZ, they qualify as zero rated supplies. So if you are using inward supplies exclusively for taxable supplies and zero rated supplies, you can take full ITC, no restriction. And if you are receiving any inwards which you are going to use it only for exempt supply, ITC is not available. But if you are receiving inward supplies which you are going to use it for taxable including zero rated and you are also going to use it for exempted supplies, then what you have to do? Only proportionate ITC you have to take. Only proportionate ITC you have to take. Whatever ITC that is attributable only to the taxable and zero rated supply, only that proportionate amount of ITC you can avail. So whatever ITC that is attributable to exempt supply, that you should not avail. Similarly, in this case also, whatever ITC that is attributable to business purposes only you should avail. Whatever ITC that is attributable to non-business purposes, that you should not avail the input tax credit. Now, how to do this apportionment? How to do this apportionment? So we'll try to understand it now. So how to do the apportionment, sir? Let us see. Right. So here I have this thing. So how to do the apportionment? For that we have here, right? So simply what you will try to do here is, so I will do one thing. I will copy all this. I will copy all this 2 pages and then just 1 minute. I have to copy the page. Okay. Copy. Okay. Copied them. Just give me a minute. Okay, I'm not getting it, I guess, here. So recently I have changed the app. Previously I used to use GoodNotes, but I have migrated to this. So I'm a little bit confused here. No issues. Okay, got it. Right. So apportionment of ITC. See, simply if I have to put it, first we will talk about inputs. First we will talk about inputs and input services. Then we will talk about capital goods and all. See, simply if I have to put it, we have to apportion it on the basis of turnover. So one thing we have got to know from section number 17, apportionment. So we have seen that whatever ITC that is attributable for non-business purposes, whatever ITC that is attributable for exempt supplies, that we have to reverse it, that we can't avail it. Now, how you will apportion that? First, one thing, make it clear in your mind, we will apportion it on the basis of turnover. So we will find what is taxable turnover, we will find what is exempt turnover. So on the basis of the turnover, we are going to apportion. But for the purpose of this calculation, what will be considered as taxable supply? See, simply if I have to put it, so you will have common ITC, no? Simply if I have to put it, there will be something called common ITC will be there, which is going to be used for business as well as non-business purposes, taxable as well as exempt supplies. So there will be common ITC, right? So what that common ITC, how you have to apportion it, that common ITC you have to take, that common ITC you have to take it taxable turnover, you have to take taxable turnover divided by total turnover. So this is eligible. This amount you can avail. Or if I put it in other way around, whatever common ITC is there, that common ITC into exempt turnover divided by total turnover. This is ineligible. Anyway, I can do. So let us stick to that. Common ITC into exempt turnover divided by total turnover. That will become ineligible. Okay. So, but what is exempt turnover? What is taxable turnover? That we have to identify. So for the purpose of apportionment, what is taxable turnover? What is exempt turnover? Little bit definitions we have to change. So for the purpose of apportionment, what will be considered as taxable supply? What will be considered as taxable supplies? The usual taxable supplies, whatever we have, those supplies which will attract a rate of GST, that will fall under taxable turnover. Zero rated supplies, even zero rated supplies also will be included in the taxable turnover only. Interest or discount on advances, loans or deposits. So whatever consideration you are getting it in the form of interest or discount. Let us say, for example, you are giving a loan. On that loan, you are collecting some interest. Generally, that is exempted. But for the purpose of ITC apportionment, we will consider it as taxable supply. That is a favor actually. That is a favor. They are considering, they are asking you to consider that interest or discount on advances, loans or deposits into taxable turnover. That means that portion of ITC which is allocated to this also you can avail. That is an advantage. So practically speaking, it is an exempt supply. But for the purpose of calculation of apportionment, they are asking you to include that interest or discount on advances, loans or deposits into taxable supply only. Okay, but however, this you should not consider it for banks, financial institutions and NBFCs. For banks, financial institutions and NBFCs, this interest or discount on advances, loans or deposits will remain under exempt supply only. So only for the purpose of other than banks, financial institutions and NBFCs, interest or discounts on advances, loans or deposits will remain under taxable turnover. Then value of supply of duty credit scrips. So this is also exempt supply, but for the purpose of apportionment, we include it under taxable supply. So what is it? Value of supply of duty credit scrips. So for the purpose of apportionment, what will be taxable turnover? It includes taxable supplies. It includes zero rated supplies. It includes interest or discount on advances, loans or deposits for other than banks, financial institutions and NBFCs. Value of supply of the duty credit scrips. These all will be considered as taxable turnover. That means whatever common ITC that is attributable for this taxable turnover, you are eligible to take it. Then what will come under exempt supplies? So whatever ITC that is attributable to these exempt supplies, that will not be eligible. So now they have expanded only for the limited purpose of apportionment. They have expanded the scope of exempt supplies. So for the purpose of ITC apportionment, what and all will be considered as exempt supplies? Number one, wholly exempt supply, nil rated supply, non-taxable supply. Till here everything is same. This is what usual definition of exempt supply. This is something which I have told you in the introduction itself. What do you mean by? What is the general meaning of the term exempt supply? Wholly exempt supply, nil rated supply, non-taxable supply. But for the purpose of ITC apportionment, they are expanding the scope of exempt supplies. It includes even RCM supplies also. It includes even RCM supplies. Those supplies on which your recipient is liable to pay GST under RCM, that also you include in exempt supplies only. Sale of land. Sir, sale of land is not a supply only. No. Yes, agreed. Sale of land is not a supply only. But for the purpose of apportionment, even sale of land also will consider it as exempt supply only. So what will be the value taken, sir? Stamp duty value. Stamp duty value, whatever is there, that should be considered as value. Sale of building, where entire consideration is received after issuance of the completion certificate or first occupation. Sir, this is also not a supply, no sir. Sale of building where entire consideration is received after the cutoff date, that is also not a supply. No. Yes, that is not a supply. But for the purpose of apportionment, that also you consider it as exempt supply. That means ITC attributable to that also will be disallowed. So that also will be considered as exempt supply, and value will be what, sir? Once again, stamp duty value. Transactions in securities. Sir, securities is not a supply, is not money. Securities, you told it is not goods, it is not services, not a supply only. Yes, agreed. But for the purpose of ITC apportionment, consider even transactions in securities also as a exempt supply. Sir, what value I have to take it, sir? 1% of the sale value. 1% of the sale value. You should have sold, you would have sold the securities, no? Out of the entire sale, take 1%. That 1% you include it in the exempt supply. Activities as per para number 8A of schedule 3. Sir, what is this activities as per para number 8A? So we have that high CC, we have that warehoused goods and all, we have that, no? So in that, they are telling that, oh, and not all activities as per 8A, only value of warehouse, not all supply of warehoused goods, only value of supply of goods from duty, not high C sales, warehoused goods. So only value of supply of goods from duty free shops at arrival terminal in the international airports to the incoming passengers, they will also be treated as supply. Sir, getting covered under schedule 3, sir, not a supply, sir. Yes, sir, agreed. But for exempt supplies included in the exempt turnover. So only value of supply of goods from duty free shops at the arrival terminal. So this you have to remember. Supply of goods from duty free shops at the arrival terminal in the international airport to the incoming passengers. They will also be included in the exempt supply. Okay. Sir, why it is very important? This is very important. Why? Because when you know what is exempt supply, what is total supply, then only you can do the proper apportionment. So for the purpose of ITC apportionment, this is what will be considered as taxable supply. This is what will be considered as exempt supply. Now, okay, so we got to know what is taxable supply, what is exempt supply. Now let us try to understand how to do the apportionment. How to do the apportionment, we have to understand. So in respect of inputs and input services, how to do the apportionment, we have the formula here. So we'll try to learn from this. Right. So the same format you have to follow. So in respect of common ITC attributable to inputs and input services. So you are buying some inputs, you are buying some input services, which you are commonly using it for business and non-business purposes, which you are going to commonly use it for, taxable and exempt supplies. In that case, how to calculate how to apportion the ITC. So here we have given some formulas. So first we have to start with something called T. Sir, what is this T? T means total input tax involved on inputs and input services as reflected in your GSTR 2B. So if you open your GSTR 2B, in your GSTR 2B, it will show what is the total ITC which is available on your inputs and input services. The total ITC you have to start with. From that, you have to exclude from T, from total ITC, you have to calculate the ITC which is credited to your electronic credit ledger in your GSTR 3B. What will be the ITC which will be credited to your electronic credit ledger? You have to calculate. Sir, how to do that? So total ITC we have. In that, 3 things you have to exclude. T1. What is T1, sir? T1 is ITC with respect to inputs or input services used exclusively for non-business purposes. Find out those inputs or input services which are exclusively getting used for non-business purposes, that you take it out. Then you determine what is the ITC which is attributable to inputs or input services used exclusively for exempt supplies, T2. Then ITC with respect to inputs or input services which are blocked. Just now we have covered 17 subsection 5. Find out what are that input or input services on which ITC is blocked. These 3 you have to take it out. So first you have T, which is falling under total ITC. 3 things you have to identify. T1, ITC attributable to non-business purposes. T2, ITC exclusively only for exempt supplies. T3, blocked credit. Take this 3. Anyhow, this 3 we are ineligible. Those ITCs which are used exclusively for non-business purposes, I am not eligible. Those ITC which is exclusively used for exempt supplies, not eligible. Those ITCs which are blocked, not eligible. So that's why from the total ITC, take out this 3. T1 plus T2 plus T3. Calculate this total figure. What is T1, T2, T3? T1 is for inputs or input services exclusively used for non-business purposes. T2, inputs or input services used exclusively for exempt supplies. T3, ITC blocked. So this 3 you have to take it out from T. So you have total ITC. From that you do the total of this 3 and you take it out. Now you will get ITC, which is attributable, which you can claim it in the electronic credit ledger. But from that, so in this ITC, what is there? In that C1, what is there? ITC which is attributable only for exempt only for, let me put it this way. In this C, what is there? C1, what is there? So in this C1, what is there is that credit which is used exclusively for taxable and business purposes. That is also there. ITC which is attributable for taxable and business purposes. That is there. In this also we have credit which is used for common inputs. Credit which is used for common inputs. That is what this C1. In this C1, when you have excluded non-business purposes, exempt supplies and blocked credit, you are getting one figure. So in that figure, what is there? Credit which is exclusively used for taxable and business purposes is there, and credit which is commonly used for taxable and non-taxable business and non-business purposes is there. Yes or no? So now what we should do is we have to find out the common credit, because common credit we have to apportion. We have to apportion only common credit. So that's why what we will do from that, T4 we will take it out. What is T4? ITC attributable to inputs or input services used exclusively for taxable, including zero rated supplies. So from this C1, you have to identify that ITC which is attributable only for taxable supplies, because that we should not apportion. This we are fully eligible. This ITC T4 we are fully eligible, because this is what we are using it for exclusively taxable, including zero rated supply. This you should not apportion. This you should fully eligible. So we are actually taking out common credit. What we have to apportion, that we have to find it out. So we got C1. In that, common credit is also there. Exclusively eligible credit is also there. So that we are separating. From the C1, you take out that ITC which is completely attributable for taxable and zero rated supply, because this is something which we are fully eligible. So we are calculating C2, which is common credit. Common credit alone we are calculating. Common credit alone we are calculating. Now this common credit we have to apportion. Sir, how to apportion? So we will calculate two things, D1 and D2. Sir, what is D1? ITC attributable to exempt supplies. Of the common ITC, how much ITC is attributable to exempt supplies? So how to calculate? Common credit you have no? Common credit into exempt turnover divided by total turnover. So I have already told you how to calculate exempt turnover. So by considering all that, you will calculate exempt turnover. Now you will have taxable turnover. If you do the total of both, you will get the total turnover. You will get the total turnover. So you have to apply the formula, common credit C2 into this exempt turnover. So exempt turnover divided by total turnover. If you do that, you will get to know what is the ITC attributable only to exempt supplies. In case if you are also using it for non-business purposes, I should calculate common ITC which is attributable for non-business purposes. So how to calculate that ITC attributable to non-business purposes? They have told one simple method. Do that common credit into 5%. Take the common credit, multiply 5%, you will get to know what is the ITC which is attributable for non-business purposes. What is the ITC which is attributable for non-business purposes? In case if you are not using any inputs for non-business purposes, completely you are using for the business purposes only, you can skip this step. So this D2 you have to calculate only when your inputs and input services you are using it for common purpose, or when you are using it for non-business purposes also, then only you have to do that C2 into 5%. If you are not at all using a single input also for your non-business purposes, then you can skip that D2 step. Okay, so you have calculated D1 ITC which is attributable to exempt supplies, D2 ITC which is attributable to non-business purposes. Now what you should do, from the common credit you have to take out, not from the common credit here, from the C1 is there, no, from that you have to take out D1 plus D2, then you will get what is the eligible ITC. So this C1 we have no, in that ITC is there. What is this C1? As I have told, C1 contain two things. We have common credit also, we have completely eligible credit also. So now from this C1, whatever D1 plus D2 is there, this two if you eliminate, you will get the eligible input tax credit. You will get eligible input tax credit. Able to understand? So this is the formula here. In this formula, in this order, you have to remember. If you are able to understand the logic, well and good. If you are not able to understand the logic, at least you remember the steps. Just apply the steps. Just apply the steps, because I can't go even more into the logic now. If you go more into the logic, this alone concept, this one apportion thing, we have understood in our class for 3 hours. Somewhere around 3 hours we have spent on this to get the complete conceptual logic here. So here, in case I don't have enough of time, if you have attended my regular session or UOB batch, you would be able to link it very quickly, because we have solved it many number of times in our regular class. If you are watching to this me for the first time, so you might not be able to understand the logic. If you are unable to understand the logic, just remember this format. So once again, for your convenience, if I repeat the format, T stands for total credit. Find out three things, T1, T2, T3. Sir, what is T1? ITC attributable for non-business purposes. Number T2, ITC attributable only for exempt supplies. T3, blocked credit. From T, take out T1 plus T2 plus T3. You will get C1. Sir, what is that C1? Total ITC. In that, what will be there? Common credit is also there. Exclusively eligible credit is also there. From that, I have to take out common credit for apportionment. Sir, how to find out common credit? So from the C1, take out T4. What is T4? ITC which is attributable to inputs or input services which is used exclusively for taxable, including zero rated supplies. This is something which I am fully eligible for. I am calculating common credit which I have to apportion. So from that C1, take out this T4. You will get C2, common credit. Now this common credit, you have to find out what is the ITC that is attributable for exempt supply. How you will do? C2 into exempt turnover divided by total turnover. In case if you are using it for non-business purposes also, you have to calculate D2. What is D2? D2 is ITC attributable for non-business purposes. How to calculate it? Very simple. C2 into 5%. So you got D1 and D2. So if you could reduce that D1 and D2 from C1, C1 is there here, no? So from the C1 reduce that D1 and D2, you will get eligible ITC. You will get eligible ITC. Understood? Clear? Right. Next one. So this is what regarding inputs and input services. Sir, what about capital goods, sir? What about capital goods, sir? So let me try to explain about the capital goods also. So these are all illustrations which we have solved. So these are all illustrations. These are all the questions. Just 1 minute. Yes. This one we will do. So ITC for capital goods. In case if you are using some capital goods collectively for business and non-business purposes, and also you are using the capital goods for business for taxable as well as exempt supplies, how to apportion the ITC attributable for capital goods? For that also I have an illustration here. So this I will try to explain in brief what exactly, how to do that apportionment and all. Right. So rule 43 will actually talk about how to do the apportionment of ITC in respect of capital goods. So till now, whatever we have seen, this is something relating to, how to do the apportionment of ITC with regard to inputs and input services. Now, in like the way we have an inputs and input services, which we are using it commonly for taxable as non-taxable, exempt as taxable, business and non-business purposes, we might also have some capital goods, which we are going to use it for taxable as well as exempt. We are having sometimes we might have capital goods which we are going to use it for exempt as well as which we are going to use it for business as well as non-business purposes. Now, how to apportion the ITC with respect to capital goods? So here what they say here is, first identify capital goods which are exclusively used for non-business purposes or which are going to be exclusively used for exempt supplies. Identify capital goods which are exclusively used for non-business purposes or which are exclusively used for exempt supplies. So that ITC you can't take completely restricted, because that capital goods you are exclusively using for non-business purposes or you are exclusively using it for exempt purposes. No ITC you can avail. Then you will have capital goods which you are using exclusively for taxable as well as zero rated supplies. That you can take full ITC. Full ITC you take, no restriction, no apportionment, nothing required. So first identify capital goods which you are using it only for non-business or exempt supplies. Don't take 1 rupee of ITC also. Then you identify the capital goods which you are using it only for taxable and zero rated supplies and also business purposes only. That you take full ITC. Now you will have common capital goods. Sir, what is common capital good? You are going to use it for business, non-business. You are going to use it for exempt as well as taxable. So now what you should do is, first you take the ITC. When it comes to this common credit, take the ITC. For this common credit, first you utilize ITC. But what you should do is, this useful life for this capital good, for this common capital good, first you will capitalize it. First you will take the ITC also. So in our example, if you take this 6 lakh rupees, I will take ITC. But I will assume the useful life of this capital goods to be 60 months. I will assume useful life of this capital goods to be 60 months. So I will divide each month what will be the amount. So 6 lakh rupees of ITC I have taken, no? Divided by 5 I have to do. Divided by 60 I have to do. So that means every month, what is the ITC attributable for every month? 10,000 rupees. So this 10,000 rupees into every month I get that figure. So this 10,000 rupees into that month's export turnover divided by total turnover I will do. That much amount I will reverse it. That month's taxable turnover, exempt turnover, total turnover I will determine, and I will try to reverse that component. If I have to put it. So if you see here, so capital goods exclusively used for non-business or exempt purposes, don't take. Capital goods exclusively used for taxable zero rated fully ITC. Common capital goods, first you take ITC. As I am saying here, first to take the ITC. First to take full ITC. Thereafter what you should do? You should assume the useful life as 60 months. You should assume the useful life as 60 months. So now for that 60 months, you have to do the reversal. Why? Because these common capital goods, you are going to use it. We will assume that we will use it for 5 years. And in that 5 years, every month you will be making taxable supply also, you will be making exempt supply also. So on monthly basis, what is the ITC attributable to the exempt turnover I will calculate. That much I will reverse month on month. So if you see here, common capital goods I have capitalized 6 lakh rupees. I will assume useful life as 60 months. So every month I will get 10,000. So now let us say I have capitalized it in the month of April. So for the month of April, I will calculate what is my exempt turnover, what is my taxable turnover. Let us say my exempt turnover is 10 lakh rupees, my total turnover is 50. So on this 10,000 rupees, I will calculate the proportionate amount, 2,000 rupees. This much I will reverse. Thereafter, next month also 10,000 rupees. Next month also I will calculate what is the exempt turnover, what is the total turnover. That much amount I will calculate, this much I will reverse. June month also, once again 10,000. For that 10,000, what is the exempt turnover, what is the total turnover of that June return, that much amount I will try to reverse it. Like this, how long I will do it, sir? I will do it for 60 months. How long I will do it? I will do it for 60 months. For 60 months, I am going to do that. Able to understand? So as simple as that here. As simple as that. So when it comes to capital goods, common capital goods, what you should do, first you have to capitalize the ITC. Then you have to assume that useful life of that common capital goods is going to be 60 months. Each month calculate what will be the amount. How to calculate it? Total ITC of that common capital goods divided by 60. You will get monthly amount. Now month on month you calculate what is the exempt turnover, what is the total turnover. That ITC which is attributable on a monthly basis to the exempt turnover, that you have to reverse it. On month basis. You are required to reverse it. Just this much you will remember. So this is how you are required to do the reversal of common ITC attributable on the capital goods. Now I have one more rule for apportionment. For banks, they have given one more option. For banks and financial institutions, they have given one option. They have given one simple methodology for apportionment. So what they have told is optional method for banks. See, if you see the banks and all, what is the main business of the banks? The main business of the banks is giving loans and collecting deposits, collecting the interest. But that interest is exempt. In the exemptions chapter, if you remember, so services provided by way of giving money for use in the form of loans, deposits or advances, for which consideration is in the form of interest or discount, that is exempt supply. So banks majorly their outward supplies are exempted. Now every month, every year, they're calculating exempt turnover, total turnover, checking the comparison. So like that, it will take a lot of time. So that's why for banks, one optional method they have given. For banks, for simplicity, they have given one optional method. So what is that optional method they have given, you know? So banking companies, financial institutions and NBFCs accepting deposits, extending loans or advances may opt to avail only 50% of eligible ITC. So for banks, they have given them an option. One option, what you can do is either you follow usual method, like the way we have done till now. So you calculate exempt turnover, total turnover, apportion the amount, like that you do. Or else we are giving you one option. What is it? One simple option for banks, financial institutions. You do one thing, whatever total ITC is there, on that you claim 50%. 50% you don't claim. 50% only you avail. Balance 50% you don't avail. And that 50% is also of eligible ITC. Sir, what is eligible ITC? Take total ITC which is reflected in your GSTR 2B. From that, take out the ITC which you are using it for non-business purposes. Take out the blocked credit. So take full ITC reflected in your GSTR 2B. From that, take out the ITC which is exclusively for non-business purposes, if any. Take out ITC which is blocked. Then you will get balance eligible credit. On that eligible credit, take 50%. Directly take 50%, 50% you leave. So that simple option we are giving it to you. Able to understand? So that's what they're saying here. So if you read this point, banking companies, financial institutions and NBFCs which are accepting the deposits or extending the loans or advances may opt to avail only 50% of eligible ITC. Sir, what is eligible ITC? Your total ITC minus ITC which is allocated for non-business purposes plus blocked credit. If you take out that, you are going to get something called eligible ITC. In that eligible ITC, only 50% you claim it, balance you leave it. And ITC on inputs and input services used for non-business purposes, blocked credits, that will anyhow be ineligible. And 50% ITC restriction shall not apply to tax paid on supplies procured from another registration within the same entity. That is 100% credit of such tax can be availed. However, this 50% condition will not become applicable in case if you are receiving a supply from another distinct person under section number 25. For that input services, you can take full ITC. For that input services, you can take full ITC. In case if you are a bank, if you are receiving services from another branch which is having separate registration, so from that branch, if you are receiving any services from your distinct person under section number 25, if you are receiving any input services, there is no restriction. Not just input services, on supplies procured. That means that could be input services also, input goods also. So in case if you are receiving any supplies from a distinct person under section number 25, on that inwards you can take 100% ITC. That will not be counted in your 50% limit. Next, the option once exercised cannot be changed during the remaining part of the financial year. It is not like 1 month you are optional, 1 month you are going it by the regular calculation and all that will not be permitted. Once you have opted it for the entire financial year, you have to remain under that category only. Since interest income of banks and NBFCs is exempt and strict application of 42 or 43 would lead to substantial ITC reversal, this 50% ITC option has been provided to ease the compliances and support lending to priority sectors. Clear? Right. Next. So with this, we have completed section number 17, which is talking about apportionment and also the blocked credit. Now what we will try to do is, we will try to understand section number 18, credit in special circumstances. Credit in special circumstances we'll try to do. Okay, right. So for this also I have charts. Let me try to do it from here. Just give me 1 minute. Okay. So this also I will try to do. Sir, what is this? Got it now. Right. So what is 18? Section number 18. So 18 subsection 1 says that there are some special circumstances where you can avail input tax credit. There are some special circumstances where you become eligible to take the ITC. Sir, what are that special circumstances where you become eligible to take the ITC? There are 4 such special circumstances which have been given on which you can take the input tax credit. There are some 4 special circumstances in which you will be eligible to take the ITC. And those 4 circumstances are given under 18 subsection 1. So first case where you will become eligible to take ITC is, let us say you become liable for registration. Let us say on one date you become liable for registration either under section number 22 or 24. Either your aggregate turnover has exceeded the applicable threshold limit, or you have done something under section number 24 because of which you become liable for registration. So you become liable for registration on 1st of April 2025, and within 30 days if you are submitting an application for registration, within how many days? Within 30 days you are submitting an application for registration. Thereafter you will get the registration certificate. No, in that case, 1 day before you become liable for registration, 1 day before you become liable for registration, you will be able to take ITC of inputs which are in the form of stock, inputs which are in your semi-finished goods, inputs which are in your finished goods. That ITC you can take credit. That ITC you can avail it. So in case if you become liable for registration either under section number 22 or 24 and you submitted the application for registration within 30 days, 1 day before you become liable for registration, whatever inputs which are contained in your stock, whatever inputs which are contained in your finished goods, whatever inputs which are contained in your semi-finished goods, that ITC attributable to that stock, only on inputs guys. I am telling you, only on inputs, not on capital goods, only on inputs. Whatever inputs which are in the stock, whatever inputs which are in the raw material, whatever inputs which are in semi-finished goods, whatever inputs which are there in the finished goods, ITC attributable to that stock, you can claim the ITC by filing one form GST ITC 01. By filing one form GST ITC 01. So that is one case. Second case, one more case, 18 subsection 1 clause B, one more special case where you will become eligible to take the ITC is, let us say you are not becoming liable for registration. You are not becoming liable for registration. You applied for voluntary registration. Even though you are not liable for registration, you are submitting an application for voluntary registration. So after you have submitted the application for voluntary registration, you will get the registration certificate. That registration certificate will be effective from that date only. Whenever your registration has been granted, from that date only it will be effective. 1 day before that effective date of registration, 1 day before effective date of registration. Whatever inputs which are there in stock, whatever inputs which are contained in semi-finished goods, whatever inputs which are contained in finished goods, and whatever ITC attributable to that input semi-finished goods or finished goods, on that you can take the input tax credit. So this is one more case. 18 subsection 1 clause A will talk about new registration. You are liable for registration. You submitted application within 30 days. 18 subsection 1 clause B will talk about you are not liable for registration. You are submitting an application for voluntary registration. Thereafter, you got your registration certificate. Before the effective date of registration, 1 day before, whatever inputs which are in the form of stock, whatever inputs which are in the form of semi-finished goods, whatever inputs which are there in the form of finished goods, on that you can avail ITC. One more case, 18 subsection 1 clause C, which says that if you are a registered person, but you are under composition scheme, you are a registered person, you are under composition scheme, but you are getting converted to regular scheme. When you are under composition scheme, you would not have availed input tax credit. But since now you are getting converted to regular scheme, 1 day before that conversion, whatever inputs which are in the form of stock, whatever inputs which are there in the semi-finished goods, whatever inputs which are there in the finished goods, that ITC you can take. That ITC you can avail. Not just on the stock, even capital goods also you can take the ITC. Even 1 day before that conversion, whatever capital goods are there, the ITC attributable to that capital goods also you can take ITC, but not full ITC on capital goods, reduced ITC. How to calculate that reduced ITC? 5% per quarter or part thereof. From the date of invoice till that effective date, how many quarters have gone by, you have to determine. For every quarter or part thereof, 5% you have to reduce it. After reducing it, the balance ITC you can avail. Understood? So if you are already a registered person, you are converting from composition to regular scheme. 1 day before that conversion, whatever inputs which are there in the form of stock, whatever inputs which are there in the form of semi-finished goods, whatever inputs which are there in the form of finished goods, that ITC you can take. Not just that, whatever capital goods which are lying there in your stock, on that capital goods also you can take ITC, but not full ITC, reduced ITC. How to calculate reduced ITC? 5% per quarter or part thereof. Next, one more case where you will be eligible to take the ITC is, let us say you are a registered person, you are making exempt supplies, but that exempt supply has become taxable. You are making exempt supplies, but that exempt supply has become taxable. 1 day before that conversion. So 1 day before that exempt supply becoming taxable supply. So 1 day before that, whatever stock is there, which is in the form of inputs, semi-finished goods or finished goods, that ITC I can take ITC. And on capital goods also you can claim ITC, but here also you can take reduced ITC. How to calculate the reduced ITC? Once again the same, 5% per quarter or part thereof. 5% per quarter or part thereof. Clear? So there are total 4 special circumstances where you can avail input tax credit. 2 circumstances on taking registration, but in that A and B you can take ITC only on inputs. Whereas in cases C and D, where you are already a registered person but you are migrating from composition to regular, or you are converting from, or your exempt supply is converting to taxable supply, in those cases you can take ITC on your inputs. Even you can take reduced ITC of your capital goods also. Okay, but there is one condition. In all the four cases, whatever I have told under 18 subsection 1, they say one more small point here. Let me take you through that. So one more point they say here. Where is it? 1 year should not have passed. 1 year from the date of invoice should not have passed. So in all the 4 cases, either it is inputs or capital goods, ITC has to be availed within 1 year from the date of issuance of invoice. So for that inputs, for that capital goods, invoice would have been given from the date of invoice. If 1 year is already expired, still you can't take the ITC. In all the 4 cases, ITC has to be availed within 1 year from the date of issuance of tax invoice by the supplier. See, in all the 4 cases, this is the common point. ITC has to be availed within 1 year from the date of issuance of invoice by the supplier. So that means that inputs, that capital goods, whatever you are taking ITC, there will be invoices. The time from the date of invoice of that stock or capital goods, 1 year should not have passed. If they are within 1 year duration, then only you can claim the ITC. If 1 year has passed from the date of invoice, you can't claim the ITC. So this 1 year condition will become applicable in all the 4 cases. Understood? Now, one more thing here. Sir, you told in 18 subsection 1, and in 18 subsection 1, there are some cases where you are liable to take ITC. Now, reverse also could happen. Let us say you are a registered person, but your registration is getting cancelled. You are cancelling your registration. you are cancelling your registration, then what will happen, sir? You are saying in 18 subsection 1A and B, if you are taking registration, one day before the registration, whatever inputs are there on that, you can claim ITC. Sir, but what if I am cancelling my registration? Then will I be liable to pay the amount? Yes, you will be liable to pay the amount. Sir, how much amount I am liable to pay? That we have already covered in the registration chapter. Amount liable to be paid on cancellation, 29 subsection 5 and 29 subsection 6. If you remember, even in the registration chapter also I have revised. In case if you are taking registration, you are made eligible to take the ITC. Sir, what if I am cancelling the registration? If you are cancelling your registration, you are liable to pay the GST under, you are liable to pay some amount under 29 subsection 5 and 29 subsection 6. What is it? ITC attributable on inputs or output tax payable. In case of capital goods, assume the capital goods useful life as 60 months. Determine what is the remaining useful life. Calculate the ITC attributable to the capital goods for the remaining useful life, or output tax payable, whichever is higher. Understood? So in case if your registration is getting cancelled, you become liable to pay the amount. When you are taking registration, they are giving credit, no. When you are cancelling your registration, you are required to pay back 29 subsection under 29 subsection 5 and 29 subsection 6. Now similarly, remaining two cases are there. Let us say, sir, you are saying if I am converting from composition to regular, I will take ITC. What if I am converting from regular to composition? If I am converting from regular to composition, what will be the case? Similarly, you told when my exempt supply become taxable supply, I can take ITC. Sir, what if my taxable supply is becoming exempt supply? What if my taxable supply is becoming exempt supply? Then also I am required to pay. Yes, you are required to pay. Yes, you are required to pay under 18 subsection 4 in these two circumstances. If your registration is getting cancelled, you are required to pay under 29 subsection 5 and 6. In case if you are converting from regular to composition, in case if your taxable supply become exempt supply, then also you will be liable to pay under 18 subsection 4. How much amount I am required to pay, sir? See here. So reversal of ITC is required when the registered person who availed ITC switches to composition scheme when his supply is getting when his supply gets wholly exempted. That means you are converting from regular to composition, or you are exempt, or your taxable supply is becoming exempt. Then you are required to reverse the ITC. Sir, on inputs, how much ITC I have to reverse? ITC on inputs should be reversed proportionately based on invoices. You have to calculate how much inputs are there in the stock. On the basis of invoice, calculate how much ITC is attributable to that stock of inputs. That much amount you have to reverse. Sir, on capital goods, how much amount I have to reverse? On capital goods, let us take capital goods ITC you determine. Take useful life as 60 months. Determine what is the remaining useful life and calculate the ITC attributable for remaining useful life. That much amount you are required to reverse. Okay, so point here which I want you all to concentrate here is, for availing ITC on capital goods, how to calculate reduced ITC. For availing ITC on capital goods in 18 subsection 1, how to calculate reduced ITC? Reduced ITC by 5% per quarter or part thereof. When you are required to reverse ITC under 18 subsection 4, there also you are required to pay reduced ITC only. How to calculate reduced ITC on reversal? Take useful life as 60 months, determine remaining useful life, calculate the ITC attributable for the remaining useful life. Important, my dear students. So if you have attended the ITC class carefully, this point will immediately strike. If you have not listened to the class carefully, this point will be very difficult. Listen, once again I am stressing it here. When you are availing ITC under 18 subsection 1 on capital goods, in two cases only you can avail ITC on capital goods under 18 subsection 1. In that case, how to calculate reduced ITC? When you are availing ITC, you can take reduced ITC on capital goods. How to calculate that reduced ITC? Take 5% per quarter or part thereof and you reduce it. 18 subsection 4, when you are required to reverse ITC, when you will be required to reverse ITC under 18 subsection 4, like as I have told, you are converting from regular to composition, or your taxable supply is becoming exempt, then you are required to reverse. You are required to reverse ITC on your inputs also, you are required to reverse ITC on the capital goods also. But when it comes to capital goods, reduced ITC, how to calculate reduced ITC on reversal? You have to calculate it, take the common ITC, take the total ITC, take useful life as 60 months, determine what is the remaining useful life, calculate the ITC attributable to the remaining useful life. That ITC you have to reverse it. Understood? Clear? Right. So this is one point which I wanted to highlight. Let us see what else is there. One more point is there. 18 subsection 6. Sir, what is 18 subsection 6? So this is a special provision which says, in case if you are selling the capital goods on which you have availed the input tax credit. In case if you are selling the capital goods on which you have availed ITC, how much amount of GST you are required to pay? Even supply of capital goods is also a supply. So in case if you have purchased a capital good. At the time when you have purchased the capital good, you have availed ITC. Thereafter, if you are selling that capital good, how much ITC you are required to pay? Very important special provision. So if capital goods or plant and machinery on which ITC has been taken are supplied outward by the registered person, he must pay an amount of tax that is higher of the following. Reduced ITC. ITC taken reduced by 5% per quarter or part thereof from the date of invoice, or tax on transaction value, whichever is higher. So in case if you have purchased a capital good on which you have taken input tax credit, thereafter you are selling it, how much a GST I am required to pay? So calculate reduced ITC. Sir, what is reduced ITC? Let us say, for example, I use this machinery for 5 quarters. Let us say 1 lakh worth of ITC I have taken. I used it for 5 quarters. What is reduced ITC? If I calculate reduced ITC, 1 lakh into 5% for 5 quarters, 25%. That means 1 lakh into 75%. Reduced ITC will become 75,000. Or this plant and machinery, this capital goods, I am selling it for this plant and machinery, I am selling it for 5 lakh rupees. Applicable rate of GST is 18%. If I calculate, it will come to 90,000. Output tax payable is 90,000. Whichever is higher. Which one is higher? 90,000 is higher. This much amount I am required to pay. So this is one special provision in case if you are making a supply of capital goods on which you have availed input tax credit. How much amount of GST you are required to pay, reduced ITC or tax payable on the transaction value. How to calculate the reduced ITC? Reduce it by 5% per quarter or part thereof. So that you will get reduced ITC. That reduced ITC you compare it with tax on transaction value. Whichever is higher, that much amount you will be required to pay. Clear? Understood? Right. That's all here regarding this. And few more things we have. Transfer of ITC on account of change in constitution of a registered person. In case if your business is getting transferred, in case if you are selling your business, in case let us say you are amalgamating, in case if there is a demerger happening, sir, can I transfer the ITC? Yes, you can transfer your ITC to the recipient. Whoever is a transferee, to that person you can transfer. So if you are selling your business, transferor can transfer his ITC to the transferee. If amalgamation is happening, so in case of amalgamation, 2 entities, A Limited, B Limited getting amalgamated into one single company, whatever ITC balance lying in their electronic credit ledger, that they can transfer to the newly formed company AB Limited. Let us say one company is getting demerged, AB Limited is getting demerged into A Limited, B Limited. In that case, whatever ITC which is lying there in their electronic credit ledger, that they can transfer it to A Limited and B Limited. But in which ratio, sir? But in which ratio, sir? In the ratio of assets. In the ratio of assets, you are required to apportion it. In case of demerger, this point is very important. So in case of demerger, whatever ITC that is lying in the electronic credit ledger, that can be transferred to the resulting entities. But in which ratio it will be transferred, sir? In the ratio of value of assets. But one important point you have to remember, this transfer will be permissible only when both are in the same state. This transfer will be permissible only when transferee and transferor both are within the same state. If both are in different states, then transfer will not be possible. So if transfer of if transfer of ITC has to happen, transferor and transferee must be registered in the same state. Why? Because SGST component is there. No, one state government will not transfer the SGST balance to another state government. No, that's the logic. So that's why if transfer has to happen in all the circumstances, transferor, transferee must be in the same state. Then only the transfer could be possible. So this is what regarding 18 subsection 3. We will also have one more heading here. In case we will also have one more heading here. So 18 subsection, no, 41A we have, rule 41A we have. So what is that rule 41A is? So let us say, for example, in the state of Karnataka, I'm having a place of business. In Bangalore, I have a place of business. In Mysore also I have a place of business. What I'm currently doing is I'm operating both of them under single registration. I'm operating. So now in this single registration, I have a ITC balance. In my electronic credit ledger, I have 1 lakh worth of balance. Now what I am doing is, for Mysore, I am taking separate registration. For Mysore, I am taking separate registration. Sir, now till now, my ITC balance is there under single registration. But now I am taking separate registration. Can I transfer my ITC balance to my separate registration? Yes. Within the same state, if you are taking a new registration, whatever ITC lying under old registration, that portion you can transfer it to a separate registration, which if you are taking within the same state, not within different state. Within the same state, if you are taking new registration, to that new registration, you can transfer that electronic credit ledger balance. But in which ratio, sir? Once again, in the ratio of assets. You will transfer the assets, no. asset ratio will be there, no, for this Mangalore location, Mysore location, assets ratio will be there, no. In the ratio of assets, you can transfer that ITC balance to the separately taken registration within the same state. Clear? Able to understand? Right. So this is what regarding transfer of ITC on obtaining separate registration for multiple places of business within a same state or union territory. Clear? So with this, we are done with this thing also. Now what we will try to do is quickly we'll try to cover distribution of credit by input service distributor. Sir, what is this concept of ISD? This will try to quickly cover it. Okay. So for this also I will take the help of the notes. Come on. See, I have done the comparison here. This also I will keep it in the marathon notes. Just refer to it. It will help you out. So I've done the comparison between 29 subsection 5, 18 subsection 4, 18 subsection 6 on cancellation, on conversion, how much amount of GST will be liable to pay on inputs, capital goods and all. This I will do one thing. This I will keep in the marathon notes. Kindly do refer to that once. So I will keep it here. Kindly do refer to it. Then, so we'll try to now talk about input service distributor. ISD will try to talk about. So very simple here. See, if you take this big companies and all, they have multiple places of business. If you take big entities and all, they have multiple places of business and they will have one head office. They will have administrative offices. Let us say, for example, one company is there which is having its head office at some location. And it is also having factories at various places where actual sales and all will happen. But if you pay close attention at the head office, outward supplies will not happen. Head offices are just liaison offices. They are just admin offices. So what will actually happen in the head office? They will take care of marketing. They will take care of accounting for the company as a whole. They will do the strategy. So all that work will happen at the head office level. But head office will not make any outward supply. Where the outward supplies will happen at their branches, at their depots, that is where sale will happen. But these head offices will get various supplies in the name of head office. They get various they purchase various goods. They get various services. Let us say at the head office, they received some audit services. For the company as a whole, there is a company X Limited. They received at the head office, they have appointed an auditor. And that auditor is charging 10 lakh rupees for audit of the company as a whole. That auditor has given invoice amounting to 10 lakh rupees with 1.8 lakh rupees of GST, mentioning the head office GSTIN. Mentioning head office GSTIN. But this head office will not have any outward supply. As I have told, head offices are just admin offices. They will not have any output tax liability. So will they be able to use that ITC of 1.8 lakh rupees? No. But where outward supplies will happen? Outward supplies will happen at their various depots, at their factories, at their depots, at their branches. Actual outward supplies will happen. So now what this head office will do? They have got some invoices. They have procured some goods. They have procured some services on which they have accumulated all the ITC. But this ITC, they can't use it for their outward tax liabilities because they don't have any outward supplies only. Outward supplies will actually happen at the actual operating places, which is spread across multiple states. See, if you see here, Mumbai, Delhi, Rajasthan, Gujarat. So like that, all over India, they have the branches. That is where outward supply will happen. So now what head office will do? Whatever ITC they have accumulated, that ITC, they have to distribute it to all its locations. Whatever ITC this head office is having, whatever common services which they have received for the company as a whole, so that all they will accumulate it, and that ITC they have to distribute it across its locations. How they will distribute it, sir? For doing this distribution, they have to get one separate registration called input service distributor. ISD registration is a separate registration from the regular registration. It is not normal registration. ISD registration is separate registration. Even though head office is separately registered as a normal person, for distributing the credit, they have to get a separate registration as an input service distributor. Okay. So now what they will do, sir? What they will do is whatever ITC is there, whatever common ITC is there, that ITC they will attribute it to all their locations. Whatever ITC that is attribute, whatever ITC is there, that ITC they will attribute it to all their locations. Able to understand? So this is what the concept of input service distributor. So this is what is the basic information. What is the role of ISD and all? So all this we have covered. Then separate registration. This input service distributor, like head offices, marketing offices, they need separate registration apart from the regular registration. So what is the manner of distribution? What should be the manner of distribution? See here. How ITC will be distributed is, well, ISD is distributing the ITC to its location. What principles it has to follow? Number one, ITC relating to a specific input service shall be attributable only to the particular recipient to whom the service is attributable. Sir, what they are trying to say here, let us say this head office is receiving some input service, but this input service is attributable only to Delhi. They are receiving input service or some input goods, but it is attributable, sorry, not input goods, input services. ISD is a concept only for input services. ISD is a concept only for input services. Whatever input services which are received by the head office, only that ITC on the input services will be distributed. Sir, what if there is common goods? There is no concept called common goods. Every unit has to purchase its goods respectively and they have to get the invoices in their own name. So ITC on goods will not be distributed. Only ITC on input services will be distributed. That's why the name input service distributor. Okay, right. So while distributing that input services, if some service is attributable to only one location, that amount has to be attributed only to that location. Sir, what they are trying to say here, let me put it this way. Let us say one input service distributor is there. They're having 4 locations, location 1, location 2, location 3, location 4. They have common ITC amounting to 10 lakh rupees for all input services. Out of that, 1 lakh is attributable only to location 2. So this 1 lakh rupees will be attributed only to location 1. Thereafter, how much is left out? Let us say 9 lakhs is left out. Out of this 9 lakh rupees, 5 lakhs is attributable only to location 3 and location 4. 5 lakh rupees is attributable only to location 3 and location 4. So that 5 lakh rupees, let us say 3 lakhs is attributable to location 3, 2 lakh rupees is attributable to location 4. That will be attributable to only those 2 locations. After that, how much is left out? 4 lakhs. Now this 4 lakhs is attributable to all the locations. Now this is a common service for everybody. Now this 4 lakhs will on some basis they will apportion it, and that will be apportioned among all the 4 locations. Let us say 1 lakh here, 50,000 here, 1,50,000 here, another 1 lakh here. So like that, they will try to distribute it. Understood? So that's what even they try to say here. ITC relating to a specific particular recipient should be attributable to them only. If an input service is attributable to more than one recipient, ITC should be distributed among such recipients in the ratio of turnover. Now the question comes, sir, you are telling apportioning. Sir, you are doing apportionment here. No, you told this 5 lakh rupees is apportionable to L3 and L4 only. How to do the apportion? On what basis? Now here is what I am clarifying the point. Now it has to be divided in the ratio of turnover in a state or union territory to the aggregate turnover of all recipients to whom input service is attributable. So you have to divide it on the basis of turnover in a state or union territory. So let us say turnover of this location is 5 lakh rupees. Turnover of this location is 8 lakh rupees. Total turnover is 13 lakh rupees. So now what is the input attributable to that 2 locations? 5 lakhs. So 5 lakhs into 3 by 13 or 5 by 13. 5 lakhs into 5 by 8 by 13. So like that, in the ratio of the turnover, I am required to apportion it. Next. ITC pertaining to input service which is common for all units is distributed to all the recipients in the ratio of the turnover. Once again, if some input service is attributable, so this is how you have to practically work it out. So first you have to take all the ITC from that, identify the ITC attributable only to one location, specifically do that attribution only to that unit. Then you identify ITC which is attributable to only few locations. You divide it on the basis of turnover of that few locations. Then you will get ITC which is attributable to all the units, that you have to apportion it across all the units in the ratio of their turnover. Next. And both ineligible and eligible ITC is required to be distributed. Both ineligible, blocked credit, everything will be distributed. Now the recipient, what he will do is eligible ITC only he will claim, ineligible ITC he will not claim. But distribution has to happen for both. You have to do the distribution for eligible credit also. You have to do the distribution for ineligible credit also. Every credit has to be distributed, and the recipient will not take the ITC of ineligible component. Eligible ITC he will take it. Next. Thereafter, now one more question will come. Sir, you are saying turnover, no? Which turnover I have to take? Which turnover I have to take? Question. Sir, you are saying I have to apportion the ITC on the basis of turnover, no? But which turnover I have to take? Monthly turnover, quarterly turnover, yearly turnover, this year, last year? Which turnover I have to take, sir? This is what here we are going to clarify here. So for distribution, we have to take turnover of the relevant period. Sir, what is the relevant period? Turnover of previous financial year. If all recipients has turnover in a state or union territory in the last financial year, you have to take the last year's turnover. That means if there is a turnover for all the units in the last financial year, take the previous financial year turnover. Sir, if in the previous financial year, for some of the units there is no turnover, Let us say, for example, this L2 was started in this year only. Last year for this no turnover is there. Then how to do, sir? Then what to do is, in that case, if the previous year's turnover is not available, last quarter prior to the month for which credit is to be distributed. This month you are distributing, no? Take the last quarter prior to the month for which credit is to be distributed, for which details of all recipients is available. For which details of all recipients is available. Let us say, for example, I am distributing it for the month of April. Okay, so now what I should do? First I will check last financial year. If last financial year turnover is not applicable, then I will check previous quarter. What is it, sir? January to March. Now in the January to March, I will check whether for all the 4 units there is turnover. If it is there, yes, I will take January to March. No, sir, in the January to March quarter also, for some locations I am unable to find the turnover. Then what you do? Go to previous quarter. Sir, what is the previous quarter? It will be October to December. Here if there is turnover for all the locations where I want to do the division, I will take this quarter's turnover. So like that, if it is not there, go to the previous quarter. So like that, they use the phrase here, last quarter prior to the month for which credit is to be distributed, for which a turnover of all recipients are available. Go to that quarter where you are having all the locations related turnover. So that quarter's turnover, you take it for the purpose of apportionment. Next. So all this is okay, fine. Right. Now, few more things which I have to tell you, a few more important aspects regarding ISD, which I have to tell you is distribution, how you have to do the distribution. See how you have to do the distribution here is, let us say if the ISD and the recipient to whom the distribution is happening, if both are located in the same state, or union territory, CGST will be transferred as CGST only. SGST or UTGST will be distributed as SGST or UTGST only, and IGST will be distributed as IGST only. But in case if the ISD and the recipient both are in different states or union territories, then always IGST will be transferred as IGST only. Even CGST also will be transferred as IGST only, and SGST or UTGST also will be transferred as IGST only. This is what one simple thing you have to remember. So how to do the distribution? In case if the ISD and recipient both are located in the same state, we'll do respective transfer. CGST will be transferred to CGST, SGST or UTGST will be transferred to SGST or UTGST, IGST will be transferred as IGST. In case of ISD recipient both are located in the same states, everything will transfer it as IGST only. Next. Right. Next. So then we have procedural aspects. So there will be procedural formalities like ISD has to give a ISD invoice. So I will summarize all this thing in one go. So ISD, what are the procedural formalities is, ISD has to give ISD invoice. For distribution, they have to give ISD invoice. On the basis of that ISD invoice, the recipient can take the input tax credit. Then in case if they want to increase the amount of ITC, in case if they want to distribute more ITC, let us say ISD got a debit note. They initially got invoice that they have distributed. Now they have got debit note. In the head office got a debit note. Now ITC regarding this debit note is also required to be distributed. Now what they will do? They will give ISD debit note. And that also they will try to apportion it. Let us say ISD got a credit note. This head office got a credit note. Now this even credit note is also required to be adjusted. That means credit note will reduce the amount of ITC distributed. So let us say previously you have distributed credit, but now you got a credit note. So now even this credit note related ITC also have to distribute. What do you mean by distributing the ITC on the credit note? That will reduce the amount of ITC for the recipients. See, practically what will happen is, let us say for example, in the month of March, ISD has got some invoices also. ISD got some credit notes also. Okay. So there are 4 locations which are required to be distributed. Location 1, location 2, location 3, location 4. So when they calculated invoices, fresh invoices, whatever they have got, ITC attributable is coming to 2 lakh, 3 lakh, 5 lakhs, 4 lakhs. They also got some credit note amounting to 1 lakh rupees. This credit note also they have to distribute. In which ratio they will distribute? In whatever ratio original invoice has been distributed? No. In the same ratio, this credit note also will be distributed. This credit note is relating to some invoice. That invoice credit has been distributed in some ratio. In the same ratio, even this credit note is also required to be distributed. Let us say that ratio comes to something like this. Here 30,000, here 20,000, another 40,000, and 10,000. This is the ratio in which original invoice was distributed. So now net amount only will be distributed. So here net amount distributed will be 1.7 lakhs. Here it will be 2.8 lakhs. Here it will be 4.6 lakhs. Here it will be 3.9 lakhs. That amount will be distributed. But now sometimes what will happen is, let us say for example, in one particular month, ISD is receiving invoices. Invoices are there amounting to 1 lakh rupees only. So amount distributed is, let us say 30,000, 20,000, 30,000, 40,000, 10,000. But they got credit note. Credit note amount is 2 lakh rupees. Credit note amount is 2 lakh rupees. So now what will happen here? They will try to distribute. If they try to distribute it here, let us say it is coming to 40, it is coming to 60, it is coming to let us say another 80, and it is coming to 20, something like this. So now net negative amount is getting transferred. How much? 20 negative, 30 negative, 40 negative, 10 negative. Now this negative figures in the input service distributor, they will be added to output tax liability of the recipients. So in case if the amount in the credit note is more than the invoices, that negative amount will be added to the output tax liability of this recipients. It will get added to the output tax liability of these recipients. Okay. Similarly, one more procedural formality they say here, in case if any excess amount is distributed, in case if the ISD distributes excess amount to any of the recipients, then that amount will be recovered from the recipient, not from the ISD. If any excess amount has been distributed by the ISD to any of the recipients, that excess amount will be recovered from the recipients, not from the ISD. This point also you have to remember. That's all. So these are all some this one amendment is there. So what is that amendment is? Not just a GST paid under forward charge mechanism. Even if the ISD is paying any GST under reverse charge mechanism, that also can be distributed. Even GST paid under reverse charge mechanism also can be distributed. This is what one amendment they have done recently. Next. So this debit notes, credit notes, all this we have covered. Then see, after all this, I have to tell you a few more things here. One thing is manner of utilization of ITC. You all are already aware of it. What is the manner of utilization of input tax credit? But let me make you revisit that. What will be the manner of utilization of input tax credit? So let us see. Sir, what is the manner of utilization of ITC? So one thumb rule, this is all something which are all well versed with at the CA interlevel itself. Now also once again I will try to repeat it. What is the manner of utilization of ITC? Just to follow this order. So first start with IGST. IGST input tax credit must be first utilized for IGST output tax liability. IGST ITC must be first used for IGST output tax liability. If any excess IGST input tax credit is available. So whatever ITC of IGST you have, that must be first utilized for payment of IGST output tax liability. After that, if any excess IGST credit is available, that you can use it for CGST output tax liability, or you can use it for discharging SGST output tax liability in whatever manner you want. Any ratio, any proportion. You can either fully use it for CGST, or you can fully use it for SGST, or you can divide it in some ratio, 50-50 you can do, 60-40 you can do, 40-60 you can do, any ratio. In whatever manner you want, you can use it. Whatever it is, first exhaust the IGST balance. First you have to exhaust IGST balance. So IGST credit must be used for IGST liability. If any excess IGST balance is left out, that you can use it for either discharging CGST liability or SGST liability, or in any combination, in whatever manner you want, you can apportion it. So once you have exhausted the IGST balance, then come to CGST credit. CGST input tax credit. CGST input tax credit must be first used for discharging CGST output tax liability. If any excess is left out, if any excess is there, what excess is there? CGST input tax credit. If any excess is there, that you must use it for IGST output tax liability. That you must use it for IGST output tax liability. Even after that also, if any excess is left out, carry forward. Even after using it for IGST output tax liability also, if any excess amount is left out, that you have to carry forward it to the next month. So then after that, you come to third item. What is the third item? SGST. So SGST input tax credit must be first used for discharging SGST output tax liability. If any excess is left out. What excess? if any SGST input tax credit excess is left out, that you have to use it for discharging IGST output tax liability. Even after that also, if any excess is left out, that you have to use it for, that you have to carry forward it to the next month. And one important thumb rule here, CGST can't be used for SGST, SGST can't be used for CGST. That's all. This is what the manner of utilization of input tax credit, which you all must be well versed with. You are already, but just I am repeating it once again. So once again, if you repeat along with me, what is the manner of utilization of ITC? First, start with IGST input tax credit. That should be used only for discharging output tax liability. After that, if any excess is left out, that you can use it for CGST or SGST in any ratio, in any combination, in whatever manner you want. First, exhaust the IGST balance. If you have exhausted the IGST balance, then only come to CGST. CGST must be used for CGST. If any excess is left out, that you can use it for IGST. If after that also excess is left out, carry it forward. Then you come to SGST. SGST must be first used for SGST. If after that, if any excess is left out, that you have to use it for IGST. If after that also, if any excess is left out, that you have to carry forward. Okay, so this is the manner of utilization of input tax credit. So few more things I would like to say it here. Two more rules I would like to explain it here. One is rule 86A. Sometimes there will be restriction on utilization of ITC. Sometimes there will be restriction on utilization of ITC. Sir, what do you mean by restriction on utilization of ITC? You have claimed ITC. GST has been shown in your, ITC has been shown in your GSTR 2B. Even under available category only, you have even claimed that ITC in your GSTR 3B. That amount was credited to your electronic credit ledger. But in the electronic credit ledger, they will restrict it. So you have purchased some goods or services from registered person. They have filed their GSTR 1. That ITC has flown into your GSTR 2B in the available category only. And you have claimed that in your GSTR 3B also. That amount got credited to your electronic credit ledger also. But after the amount got credited to the electronic credit ledger, they will keep in the electronic credit ledger under restricted category. That means the balance will lie in the electronic credit ledger, but they will restrict you from using it. It's like there is a food in your plate, but you can't eat it. It's like there is a food in your plate, but you can't eat it. So there will be a balance in your electronic credit ledger, but the officers will not let you use it. It will be restricted in your electronic credit ledger. Restriction on utilization of input tax credit. Sir, when they will play with me like this, sir? When they will put the restriction, sir? Let us see. First of all, who is the authorized officer to do it? Commissioner or an officer not below the rank of assistant commissioner authorized by him can impose restrictions on utilization of ITC in the electronic credit ledger. When, sir? If he has reasons to believe that ITC has been fraudulently availed or is ineligible. So if the commissioner or any other officer authorized by him not below the rank of assistant commissioner, if he has reasons to believe that ITC has been fraudulently availed or ITC is ineligible, even after getting credited to your electronic credit ledger also, they can put the restriction on it. So generally that restriction can be imposed in the following circumstances. What are they, sir? Number one, ITC has been availed on the basis of tax invoices, debit notes or prescribed documents which are issued by a non-existent registered person. You are getting the tax invoices, you are getting the debit notes, or you are getting some other documents by a non-existent person. That person itself is not there. That your supplier itself is non-existent. Or from a supplier who is not conducting any business. That means fake person. Or without actual receipt, if the officer feels that you are claiming the input tax credit without receiving the goods and services, or in respect of any supply, tax in respect of which has not been paid to government. So like tax was not paid to the government, you are claiming it, but tax was not paid to the government, then also they will restrict it. Next, registered person is availing ITC, has been found non-existent or not to be conducting any business from the registered place. Now recipient. Here in the first point they spoke about supplier. Second point, if you are a recipient who is a registered person, you are found non-existent. You are not there at the place of business. When the people came for verification, you are not there. Recently this happened with one of my client. So not one of my client. After he has stuck with the issue, then he became my client. So he changed his place of business. When they came for verification at that place of business, his business is not there. He has shifted it, but did not inform. He did not do the amendment of registration. He did not do amendment of registration of core fields. So now this is the case here. They have restricted the complete ITC. Right. So registered person availing ITC has been found non-existing or not to be conducting any business from the registered place of business. Or registered person availing ITC is not in possession of tax invoice, or the commissioner found that you are claiming ITC but you don't have any invoices. So in these cases, they will restrict the usage of ITC. And how long they will restrict it, sir? They can keep that restriction up to 1 year. So within that 1 year, if you want to take any action like inspection, search, seizure, if you want to do it, but up to 1 year only you can keep the restriction. After 1 year, you should release that restriction. Now, sir, who is the proper authority for doing that, for putting that restriction? Commissioner or principal commissioner is the proper officer. Next. So here also authorities they have given, in case if the ITC which is wrongly availed or ineligible is exceeding 1 crore rupees, the proper officer to restrict the utilization is deputy commissioner or assistant commissioner. If the amount is above 1 crore but not exceeding 5 crore, additional commissioner or joint commissioner. If the amount is above 5 crore, principal commissioner or commissioner, hierarchy. Depending on the higher the amount, the more higher level of officers will get power to do that restriction. Next. So this is what rule 86A. Now I will talk about rule 86B also. Now I will talk about rule number 86B. Sir, what is rule number 86B? Very simple here. Very, very simple. So let me see whether any ready notes I have for this. So all these concepts now wonderfully we have understood in our regular class. If you have attended it, this all should be striking in your mind. Rule 86B, where is rule 86B? Not there here. Okay, no issue. There is no specific notes. Anyhow, I will try to explain. So what is this rule 86B is? See, as a prudent businessman, you will make an outward supply. Okay, you will have your output tax liability. Let us say you have 10 lakh rupees of output tax liability. Now you are having input tax credit. Let us say you are having 12 lakh rupees of input tax credit. What you will do here? What you will do when you have an output tax liability, but you have enough of input tax credit, every prudent businessman, what he will do is he will try to discharge his output tax liability using his input tax credit. No unnecessary, no fool will want to pay the money from his pocket when there is already ITC available. But department told, what you know, we will notify some person. If your taxable turnover in a month, if your taxable turnover other than exempt supply or zero rated supplies, if your taxable supplies in a month is greater than 50 lakh rupees, and if you are having a output tax liability, even though you have full input tax credit, you can discharge your output tax liability only up to 99% using input tax credit. 1% you have to pay it in cash. So what they have told, what the department has told, if you are such a registered person whose value of taxable supply in a month, if your taxable supply, when I say taxable supply, other than exempt supply, other than zero rated supply, even zero rated supply also you don't consider. So other than exempt supply, other than zero rated supply, if your value of taxable supply in a month, in that particular month, if your value of taxable supply has exceeded 50 lakh rupees, for that month, whatever your output tax liability is there, even though you have full input tax credit, you can't use 100%, you can't discharge 100% of your ITC using your input tax credit. You can discharge your output tax liability using input tax credit only up to 99%. Only 99% of your output tax liability you can discharge it in. You can discharge it through electronic credit ledger, even though you have enough of balance. That remaining 1% you have to compulsorily pay it in cash. That's what they have told. So that is the nature of restriction. The registered person to whom the said rules is applicable cannot use ITC to discharge the output tax liability in excess of 99%. The balance 1% must be discharged through electronic cash ledger only. However, there are some exceptions to rule number 86B. In some cases, they have given some exemptions. To some genuine persons, they have given exemption. If you are a genuine person, even though your aggregate turnover, even though your taxable turnover in a month has exceeded 50 lakh rupees, still we will let you use 100% ITC. We will let you discharge 100% of your output tax liability using input tax credit. When, sir? When you are such a person, you are a genuine person. But how to find out you are a genuine person? In case if you have made a payment of income tax of more than 1 lakh rupees in the last 2 preceding financial years. In the last 2 preceding financial years, you should have made a payment of income tax more than 1 lakh rupee. Not just in 1 year. If you are paying an income tax of more than 1 lakh rupees in the last 2 financial years, then we will consider you as a genuine person. Since you are paying more than 1 lakh rupees of income tax, we will accept you as a genuine person, and we will not make rule 86B applicable for you. We will not make rule 86B applicable for you. That means you can discharge 100% of your output tax liability using your input tax credit. No issue, we will permit. No issue, we will permit. Provided you are a person making payment of income tax more than 1 lakh rupees in the last 2 financial years. Or if you are such a person, if you have received a refund of input tax credit of more than 1 lakh, so you are making zero rated supplies. On your zero rated supplies, if the GST department has already granted you 1 lakh rupees of refund in the last 1 financial year, enough. Income tax last 2 financial years. No sir, I did not pay income tax in more than 1 lakh rupees in the last 2 financial years. No issue. If you are such a person who is making zero rated supplies, and if the department has granted you, which department? GST department. If the GST department has granted you refund of more than 1 lakh rupees, refund of unutilized ITC of more than 1 lakh rupees in the last financial year, we will treat you as a genuine person. We will let you use 100% of your ITC. Next, one more case. payment of one more case, payment of output tax liability through electronic cash ledger in excess of 1% of total tax liability in the current financial year. Sir, what is it? I think for this I have an example. I guess. Yeah. So let us see here. Okay, where is it? Okay. So let us say, for example, there is a month in the month of April. In the month of April, you have an output tax liability amounting to 18 lakh rupees, but you have ITC amounting to 15 lakh rupees only. Rule 86B anyhow will not become applicable. Why? Because you don't have full ITC. So what you have done in the month of April, 18 lakh rupees of ITC output tax liability, 15 lakh rupees of ITC only. You have 3 lakh rupees. You have to compulsorily pay it in cash. 3 lakh rupees you have paid it in cash. May month, your turnover is less than 50 lakh rupees. Anyhow, Rule 86B will not become applicable. You have an output tax liability amounting to 5 lakh rupees. You have full ITC, 5 lakh rupees. You have used it. Next, June month came. In your June month, your output tax liability is 10 lakh rupees and your turnover is also more than 50 lakh rupees. So Rule 86B will become applicable. But one exception they are saying. What is that one exception? No. Till date, what is your total output tax liability? From the beginning of the financial year, till date, what is your total output tax liability? Sorry, what is your total output tax liability? So what is my total output tax liability? 18 lakh rupees plus 5 lakh rupees plus 10 lakh rupees. So till date, my total output tax liability is 33 lakh rupees. Now, till date, have you already discharged using your electronic cash ledger at least 1% of this? Till date, what is your output tax liability? It is 33 lakhs it is coming to. Let us say for this month of June, I have full ITC. 12 lakh rupees of ITC I have. But my turnover has exceeded 50 lakh rupees. Generally, Rule 86B will become applicable because my turnover is more than 50 lakh rupees and I have to use, even though I have full ITC, I have to discharge 1% compulsorily in cash. But one more relaxation they are giving. Determine what is the tax liability till date. What is it? 18 plus 5 plus 10, 33. Till date, from the beginning of the financial year, how much you have paid in cash? I have already paid 3 lakh rupees in cash here. From the beginning of the financial year, I have already paid 3 lakh rupees in cash. So what is 1% of total output tax liability? How much it will come to? So it will come to 33,000. But till date, you have already discharged 3 lakh rupees, which is more than 1% of the tax liability. 1% of the tax liability till date. Since you have already paid till date, from till date, whatever your output tax liability is there, in that, since you have already paid 1% in more than 1% in cash, for this month also will not let you come under Rule 86B. Utilize full ITC. Happily enjoy full ITC. 10 lakh rupees fully you use it. Understood? So that is what the third relaxation they have provided. So if a registered person has discharged his output tax liability through electronic cash ledger for an amount in excess of 1% of total output tax liability applied cumulatively up to the said month in the current financial year, restrictions in Rule 86B should not apply. Clear? Right. And also there are some specified registered persons to whom that Rule 86B will not become applicable. So Rule 86B is not applicable to below mentioned persons. Who are they? A government department or public sector undertaking, local authority or a statutory body. For these people also Rule 86B will not become applicable even though they have a turnover of more than 50 lakh rupees and even though they are not paying income tax, even though they are not getting refund, even though till date they did not discharge 1% in cash, still these people are exempted. Unconditionally these people are exempted from Rule 86B. That means they can discharge 100% of their output tax liability using input tax credit. Clear? Able to understand? Right. So that's all. With this, we have completed input tax credit chapter. With this, we have completed input tax credit chapter fully. We are done with it. Okay. Right. That's all here for today. I will try to wind up this ITC. And yeah, we have fully spent our time on input tax credit chapter, but it's the time worth spending here because such important this chapter is. I hope you would all have benefited from this. So I will wind up the session for today. Today we have exceeded the time, but no issues. It's fine. So tomorrow we'll try to continue our revision series with the subsequent chapters. Bye. Take care.